One new gold stock making big headlines since its start last April, acquiring gold for $5 to $10 per ounce in the ground, which is dramatically lower than the $50 to $100 per ounce in the ground other companies have been paying. To learn more about what hard asset investors are calling a mineral bank, visit futuremoneytrends.com/investright.
Well, first of all, thank you everybody for spending the evening with us. We're going to have a great evening. My name is Daniel Ameduri with futuremoneytrends.com. I founded the company about 5 or 6 years ago after, for years I had wanted to talk to people who were interested in the alternative side of what is going on in the economy. And it started out as a hobby in 2008, and it just grew into this amazing newsletter that is, I consider, the personal finance newsletter for the new economy. Over the years, I've met some great people. The gold sector itself, I think it's just full of people with high integrity. The very thought of having sound money, you'll notice that these people, whether you're talking about the blogs or the websites or the CEOs of mining shares, it's a different breed. It's people who are very, very interested in honest money and what is right. And that's one of the reasons why I'm so happy to be sitting here next to Andy Hoffman. Andy Hoffman has got to be one of the most honest guys I know. And I met him on a mining tour one day. Actually, I met him at a hard asset show in 2010, but really got to spend some time with him visiting a mine. And it was certainly incredible. Everybody knows that gold is rare, but when you go to one of these mines and you watch them fill these massive truckloads full of ore and realize that out of a ton of ore, about an eyelash of gold is found in it, you realize how rare this precious metal is. Just want to do a brief introduction on what I feel gold is, and then we'll get into some questions and answers. So there's no... the expectations of this evening is for everybody to have a great evening, ask as many questions as you want. Andy Schectman's been in the business for over 30 years. Andy Hoffman's been in the business for 15 years. And these guys know gold and silver, platinum, palladium like nobody else. These are the people to talk to about gold. I know everybody's been invited to free seminars, free conferences. This one is going to be very unique. There is no upsell. We have no books in the back, no CDs, and we're certainly not going to sell you a $20,000 seminar when this is wrapped up. So just relax, enjoy yourself. You're amongst friends. So gold for me is insurance, and I think it's a unique insurance in that it's financial insurance. But unlike most insurances today, there is an opportunity because of gold price suppression. Because central banks, because governments, because large banks are suppressing the price down, this has become an opportunity to buy this insurance that would make gold more like an investment today. And what I mean by that is if I wanted to buy fire insurance, I cannot call Allstate up when the kitchen is on fire. If I wanted to buy earthquake insurance, I cannot buy earthquake insurance after the foundation is already split into two. And if I wanted to buy auto insurance, I cannot call my agent and get full coverage auto insurance after I've driven over the cliff. And that is exactly the opportunity we have today to buy gold and silver. The 2008 financial crisis was the earthquake. The foundation of our monetary system has already been split. It's coming apart. It's unfolding as we speak. When I look at negative interest rates, I see the kitchens on fire with our monetary system. And when it comes to driving over the cliff, you look at the unprecedented actions our governments have taken, whether it's the national debt that continues to soar, the interest rate policy by the Federal Reserve, the intervening of our markets on a daily basis where we no longer have markets. You can still buy the insurance, and the place is already burning down. And that's significant because it makes it the best insurance you could buy today, and that's physical precious metals, in my opinion. I am not a person who recommends 100% precious metals. Maybe some people here will disagree with me, but I do believe it is a very important insurance, and unlike decades past, because of what we have seen since 2008, the insurance becomes a unique investment tool, almost where you're guaranteed a great return. When it comes to other reasons to own gold as insurance, I think a lot of people think about gold as if everything's got to crash, and then it all of a sudden becomes a great investment or a great vehicle to hold your wealth in. But today, we can cite Cyprus, where people, whether you had $200,000, $300,000 in the bank, you couldn't even get $300 out. 2008, my uncle, who was 82 years old at the time, he had his money in Pasadena, California, at a bank called IndyMac, and it didn't matter how much money he had in that bank, he couldn't get it out. After 9/11, the stock market was closed for 4 days. After World War I, the stock market was closed for 4 months. So many people think that buying financial instruments in the stock market, whether it's GLD, a mining share, IBM, Walt Disney, whatever, it is not as liquid as gold. Nothing is. Gold is liquidity because it is money. It is the ultimate money. The dollar and all these fiat currencies are backed only by faith. That's it. As soon as people lose faith, there will be a financial crisis in those specific currencies. Lastly, I just want to point out that a lot of people will talk about the gold price, and I'm sure that will be discussed many times tonight. But in 10 years, I cannot tell you where the U.S. dollar will be. In 10 years, an ounce of gold will be an ounce of gold. So whether the ounce of gold is $50,000 or whether the ounce of gold is $900, to me, that is the dollar's problem, that the dollar is volatile. Gold is rare. It is pure. It is it's the only metal that doesn't rust and corrode. Even silver, if anybody owns silver here, after a year or two, if it's in your safe and you haven't kept it stored properly, like I haven't, because it's in like Monopoly boards and stuff. The kids play with the silver with their Monopoly game, and that silver is all rusted up. It's got marks all over it. So gold is incredibly rare. It is a store of value, and right now with Russia loading up on financial hackers, China buying gold by the pallet, and mining companies across the world, I think now is a better time than ever right now to own gold. With that said, I'll open it up to question and answers. Andy, I don't know if you want to make a quick introduction of yourself and your company?
I do. Thank you, Daniel. I guess it wouldn't be fair if you didn't know who was giving you answering your questions. My name is Andy Schectman. I am the owner of Miles Franklin. My father and I started Miles Franklin together in 1989 with the proceeds of 2 sold life insurance policies and a loan from a friend. My father's middle name is Miles, and his best friend from high school who loaned us $60,000, middle name was Franklin. We bought him out a year and a half later, and I'm here to tell you that the American dream is still alive for those of us who have a vision, and as Andy and I joke about often, strong fingertips to be able to hang on through the lean years. In 27 years, my company has never had a customer complaint, not one. In 27 years and over $5 billion in customer transactions, we've never lost a package, not one. We are one of only 27 companies in the world on the United States Mint website. We were nominated by Prudential Beige. In order to be an approved, authorized reseller of U.S. Mint products, you have to be nominated by one of the 6 primary Mint distributors. And Prudential Beige nominated us 7 years ago. For that, we are eternally grateful. What this means to you is that our reputation is great. But that's important. It's more important than me trying to pat myself on the back. It's important because this is a federally non-regulated industry. And in the last 3 years, the 3 biggest, cheapest companies in the industry have disappeared with client money. And it's ironic, it's always the cheap online retailer that people are asking us to compete with, and it's the 3 big cheap online retailers that are bankrupt and gone in a federally non-regulated industry. 3 years ago it was Hannes Tulving. Everyone said, can't you compete with Tulving, Andy? Come on. And I'd say, listen, I'm on the Mint website. I deal directly with the Mint. They're selling it at my cost and delivering it free. So you tell me, is that a good business model? Hannes Tulving will spend the next 55 months in prison, and $50 million of money from people who invested with him will never be recovered. Last year it was Bullion Direct. Same conversation. Can't you compete with Bullion Direct, Andy? I don't understand why they're so much cheaper than you. And I'd say, neither do I, to be honest with you. Well, the owner of that company will find himself spending a good portion of his adult life in prison. And just a few weeks ago, it was Northwest Territorial Mint. Cheaper than anybody. Go figure. Bankrupt. Lots of money missing. What my father and I have been good at doing is partnering with good people. Oh, by the way, before I mention the good people, the state of Minnesota, as of last July, my home state, is the only state in America that is regulating my industry. So, as of last July, if you want to do business either into the state of Minnesota or as a company in Minnesota like we are selling out to you, you have to be licensed, bonded, $200 million surety bond, folks. It's expensive and extremely onerous. And you have to have compliance officers and regulations that no one else in America does. 7 of the biggest companies in America have given me their Minnesota database. They said, we want nothing to do with your state. So others just won't sell into the state who don't know me. So what that basically tells you is that if you buy from us and I decide to cruise to Tahiti with your money and never give you your gold, the state of Minnesota has a $200 million surety bond. If you take anything away from this conversation, from this entire meeting, please understand this. Aside from what Daniel said about price, we'll get to price, because price is a tool of misdirection, and I hope people ask us about the manipulation, because that's where it all is. That's where the truth is hiding, in the manipulation of the price. But the bottom line is this: if you focus on price, not only will you be misdirected by the market, but you'll be misdirected by companies who are too cheap to stay in business for when you really need them most, when things get really troublesome. So, do business with us. You're guaranteed you'll always get your product. And in a federally non-regulated industry, we're very proud of our reputation. But the state of Minnesota doesn't care about that. They're making sure with the big surety bond that we do. What has made us successful is not our acute knowledge of economics or precious metals. It's being honest, and it's being associated with good people like Daniel, like Andy Hoffman, and many others throughout the industry. And Andy Hoffman writes our newsletter. He's tireless. I'm sure most of you are here because of Andy. He works harder than anyone I know, but more important to me is, as Daniel said, he's honest, but even more important than that, he believes what he says. And that to me is the most important thing, that he's not just honest amongst his friends, but honest in what he says, because that's more important than anything. As the face of my company, he is more passionate than anybody I know. So with that being said, I very much appreciate that you're all here, and I hope you'll fire away any questions that you have, and know that we take it very, very seriously. I'll let Andy introduce himself real quick, and then we'll get started, but thanks again for coming. Appreciate it.
Oh, that was where Andy was going to talk about Miles Frank and all the things we do, such as our storage program. I'll just say one thing. Of all the things on this list here, the newsletter and everything, we talk about, there's brokers out there who might sell you something that's a little cheaper. Whether it's profitable or not, it's another story. There's another part of the transaction process, and that is the sale. And even though 99% of our business in 30 years has been people buying product, some people actually do sell, usually because they need the money or because they have a medical expense or they're buying a house, but they do sell. And a lot of the people that are trying to sell you product at cheap prices don't tell you that when you want to sell it back to them, they're going to charge you exorbitant bid-ask spreads. And we are going to always offer the best buyback price in the industry, and if you're a client of ours, you're going to get a really good buyback price. So people don't realize that sometimes. But, I'm going to move on to myself, and then a lot of questions and answers. And the first thing I'm going to say again, I'm Andy Hoffman. Probably a lot of you have read or listened to me. And I've been with Miles Franklin now. It'll be 5 years later this year. Andy used the term, all the good people that he's seen in the industry over the years, and Daniel as well. And, the term that I've used the term many, many times in writing. I've used the term good, smart people. They're very hard to find, not just in business, but in the world. And when I'm talking about our business, I'm talking about the handful of people that actually know what they're talking about, and they have your best interests at heart. Because there's plenty of people, even in our business, who are they're smart, they understand, but they have an angle, and the angle is not necessarily in your best interest. And I truly believe that what we are doing here is in your best interest, and Daniel as well. I mean, I'm thrilled to have him here. He's, to me, the ultimate good, smart person in this business. In fact, he said that we met in 2010. No, we actually met because there was an organization called the National Inflation Association back in 2008, 9, 10. That's about the right time.
Yeah, but I don't talk about that.
Doesn't matter. No. The National Inflation Association, yeah, they had some guys that they were making stock picks. Doesn't matter. The reason I learned about them is because they put out the most educational, amazing videos I've ever seen in my life in the business world. And the man behind those videos was Daniel. It was his voice. It was his production. Just Google, what's it, The Day the Dollar Died? That's the one I remember.
Yep.
Google it. It's probably the most, one of the best videos I've seen in this world. And that's how I came across Daniel. And it was when I was at this conference when I was in the mining industry that I saw him standing there. And I said, I know, that's the guy, and I was the one who was starstruck. And so we struck up a friendship, and here we are 6 years later almost, working together at a conference. And again, this conference is not to sell you anything. Yes, we want you to buy precious metals, but we're here together because we're doing this. I think everyone in this room is going to benefit from what we're doing. As far as me, if you don't know me, I live in Denver now for 9 years, but I'm from New York, as I say there, hardcore Wall Street. I worked on Wall Street for 15 years. I worked on the buy side and the sell side. I worked at a whole bunch of companies that were embroiled in scandals at some point or the other. Actually, I'm here in Houston. I worked as an oil analyst for 7 years with Solomon Smith Barney. That was the height of my career. And the funny thing was the most famous thing I ever did there was when the internet was hot, and all of the bankers came to all the analysts at Solomon and said, you got to do internet reports, talk about the internet on oil. And I wrote a report called Bubba to Bubba, B2B, about the oil field internet companies that were going to take over the world. And I came down to Houston, and I kid you not, I had 3,000 people listen to me speak about all the oil companies. This was the bankers made me do it. I had to write this report. And you know when I did that report? March 2000, right at the top. So that's the essence of what Wall Street is, and that's a big reason why I wanted out. I just couldn't take all that conflict of interest anymore. And the sad thing was, those were the good old days compared to what these banks do now. Now they literally just steal from you as opposed to mislead you for profit. So I've now been 14 years this month in precious metals, 100% invested. At one point it was all mining shares, now it's all metal. That's your choice. I'm telling you, that's what I do personally. I worked for 5 years in the mining industry. As Daniel said, when he was promoting mining companies, I was also promoting mining companies, and I was also working at mining companies. So I have a very diverse background in the financial aspect in Wall Street and in mining. And don't let this baby face kid you. Andy's been around almost as long as anyone in the entire bullion industry. I mean, 27 years is a long, long time, and he's been there through thick and thin. So, there'll be a lot of questions. Oh, what's going on with the markets? don't let this opportunity pass you to ask questions about the opaque bullion industry. You can understand why the Tolvings went bankrupt, why the Northwest Territorial Mints went bankrupt. Ask us questions, and you'll understand just how simple this industry is to navigate if you have a good guide. So to that, let's start the Q&A. No questions are off bounds. Oh, yeah, okay.
Just a couple of things to think about in asking questions, just to give you a primer, or give you some things to think about. Economics, geopolitical events. Andy is your man. Manipulation, myth, or reality. We'll all talk about that, and I can tell you that's Chris Powell from GATA. And by the way, for those of you who don't know GATA, in my opinion, we all owe them a debt of gratitude if you own gold. The Gold Antitrust Action Committee. Chris Powell, the president, is famous for saying there are no free markets anymore, just manipulations. We can talk about that. The paper price versus the physical price, the disconnection. This again is related to price suppression. ETFs and paper gold. If any of you own GLD or SLV, we should talk about that in pages 6 through 12 entitled, in the prospectus titled Risk Factors. If you own it, make sure you go print out the prospectus and read pages 6 through 12 and really read it. You'll sell it the next day, I promise you. Inside the precious metals industry, why are companies going bankrupt? What can you do to protect yourself, etc.? Places to store your precious metals, or ways to store it at home. Taxation and reporting requirements, and this is again for people back there who can't read the screen. That's a big deal for a lot of people, especially if you have gold offshore and as it pertains to FACTA and FBAR. We can talk about that. Confiscation, we're asked that question an awful lot. I have a couple takes on that myself. Types of metal to own or avoid, whether it be numismatics or palladium or platinum, we can talk about that. How to order and ship precious metals, it's really probably the easiest investment you've ever done, even easier than opening a bank account. Traveling with gold. If any of you travel, I have a really cool story of traveling with $300,000 in gold in Montreal and what happened to me in the airport. It's pretty cool. And regulations within the precious metals industry. What regulations? There are no regulations at all unless you're in Minnesota. None at all unless you're in Minnesota. So with that, let's open it up. And again, thank you very much for being here. And there are no dumb questions. Seriously, there are no dumb questions. Folks, please ask them.
Real quick, how many people know Rick Rule? Raise your hand. Okay, I thought this was very impressive. You know, I went to a Sprott conference. First of all, I went to a Casey conference, and they invite the companies that go there that do presentations. And I noticed Miles Franklin was there. That was interesting. They were the one bullion company chosen for that letter, which is a very popular gold letter. Went to the Sprott conference. I noticed that they were there, but there was also the Sprott bullion company as well. And I went to Rick Rule and I said, Rick, why is Miles Franklin here along with your own internal company? And Rick actually told me that all the brokers, he's got, like, I want to say like 130 people there that work for him at Carlsbad.
Not that many.
Not that many? Okay, maybe they do some layoffs in the bear market. But out of all of his brokers, and Rick told me that they do not buy from Sprott Metals. They actually send people to Miles Franklin. And I think that's a big endorsement of your company from a very important person in the sector.
I appreciate that, and I'll say this publicly. To me, it is the biggest accomplishment of my career, the fact that the most influential person in my industry, this is a guy that when he comes to the conferences, they pay him to come there, and he speaks every day from 6 to 7. People get up at 5:30 in the morning to go listen to this guy speak. He stays there from the moment the floor opens until 6 o'clock at night. His brokers are falling asleep, and he's sitting there answering questions. He's the most influential guy in the industry, and I'm so appreciative of his endorsement of us. Thank you, Daniel. I wasn't going to mention that, but as far as I'm concerned, it is probably the biggest endorsement of my company, period. Rick Rule could make or break us with one bad complaint, one bad sale, and I'm done. That's why we really, really, really go the extra mile to make sure we don't ever have that person be the first person to file a negative remark about us.
If you have a question, if you just want to raise your hand, I'll come around the room and just get my attention.
Andy Hoffman. Andy, I saw the movie recently, maybe The Big Short, and you were I guess, in that industry at some point. When I read your articles, I always feel that's where it's heading. It's that crooked. And it's, why is it taking so long for that to come to, come out as it did with The Big Short?
Yes, The Big Short, the movie that just came out, which everyone should see. It's a brilliant book and a really good movie. It's about how the Wall Street firms created the means to bet against their own product, and there were a handful of hedge fund managers that actually made billions doing it. The fact is, I get asked all the time the question of, well, when's it going to happen? But the point is, it not only is happening, it's happened already in most of the world. People are so secular in this country, they don't realize there's only 300 million people in America, but there's 7+ billion people around the world. Right now, the average currency around the world, if it's not at its all-time low, and many are way below their all-time lows, it's pretty darn close. And that includes, by the way, the BRICS, Brazil, all-time low, the Brazilian real. Russian ruble, same thing. Indian rupee, same thing. South African rand, same thing. The only one of the BRICS currencies not at an all-time low, Chinese yuan, because it's pegged to the dollar, and it won't be for long. It will be devalued in a dramatic way. It's already been devalued somewhat. And this is where, how many people live in these countries? 3 billion people? But it's not just those countries. It's all over the world. We talk, Daniel talked in the beginning about how you can still buy this insurance while the building is burning down right now. And I've been saying this for some time. I've never seen any situation in history, financial history from my observation, where you could actually buy insurance when you need it. It's incredible. But for those 6 billion people with all those other currencies, they can't buy it. For one, in most countries, gold has already soared. For instance, if you live in Russia, right? The price, I look at where the all-time highs were, mostly from 2011. The price is 50% above that. The only problem atop that is you can't get gold in Russia. So there's, you say, when's it going to come apart? For most of these people around the world, it already has come apart. You can't insure yourself, and it's already fallen apart. The corruption, look at a place like Brazil. I mean, I spent the last year or two saying they won't have the Olympics. And you know what? I don't think they're going to have the Olympics. Or if they do, no one's going to show up. The corruption, the inflation, this is just a small microcosm of the world, but it's happening everywhere. And the only reason that it's been able to last longer here, where we haven't had this, complete loss of control, is because we've had the reserve currency. More people own our currency, and it's used for more things. Therefore, the Federal Reserve can get away, or to this point has been able to get away, with doing what everyone else is doing without too much damage. Now, there's been plenty of damage. I mean, quantitatively, this is the worst economy that we've had in our lifetimes. I think you'd have to go back to the Great Depression for the nation being in this bad shape financially. Of course, back then, there was no debt in the world, in the country, because we were on a gold standard. So I think things are much worse, and the competitive landscape around the world will make it even more difficult. And the oversupply that's been created in almost every industry because of all the money printing over the years makes it so that we're not going to be able to get out of this without a reset. So I would say that if you look around, if you think about your own life and you think about the rise in cost of living, and you look at your neighbors and you see, I mean, this is a unique market because Houston is so tied to energy. But again, I would say that objectively speaking, this is worse than we were in 2008, aside from the propped up financial markets, and it will eventually get there. It's a mathematical certainty.
And Andy, I would say also that everybody that's in power, from the politicians to the oligarchs, the system works for them right now. So what will they do to defend it? They will do anything to defend it. We've seen the evidence by the intervention in the markets, the interest rates. So, why is it taking so long? Also, as far as like the Western, or the U.S. and the West, everybody that's in power is trying to keep this thing together.
I'd like to add something to that, too. Andy's gift, Andy Hoffman's gift, is to be able to see so many things at once and to break them down and to analyze them and to be able to explain them. I don't have that gift, but what I have that has served me well is the ability to, in my own mind's eye anyway, to see things in a big picture. And people ask that question all the time. Why is it taking so long? And why doesn't the price make sense? And I'd like to add my 2 cents to that. You know, we live in a world where information travels immediately about anything. So you would think that all the information we're bombarded with is transparent. Think about any game that you've ever played, ever, where you have an opponent, whether it be chess or perhaps basketball or football or any game where there's an opponent. You could take it a step further and talk about war or maybe finance. The objective of most games where you have an opponent is misdirection. Chess, football, basketball. The point guard does the no-look pass. You fake the handoff here and you throw the screen pass there. You misdirect the opponent. You never are transparent with your movements, or you cut off your nose to spite your face. So, what if, just what if, the big money realizes we're screwed? What if? Maybe they see what we all see. In fact, I bet you they do. And what if, just what if, they're trying to reposition themselves in a world where information travels like that? How do you do it? Misdirection. You misdirect the futures markets, you misdirect the commodity prices, you misdirect the equity markets by goosing the equity markets and misdirecting by shorting the commodity markets. Now, when I say short, for those of you who don't know what that means I'm selling it, something I don't own, to drive down the price, more or less. But the idea of selling short is that you anticipate being able to buy it back at a lower price. Well, that's not the reason why these people are shorting. I believe big money. Let's talk J.P. Morgan. Over the last 3 years, J.P. Morgan, by Ted Butler's own estimates, have amassed 600 million ounces of physical silver in their house account. This is many times larger than the largest position the world has ever seen. Right? That's classic misdirection. They're shorting the paper price, driving it down with leverage. To give you an idea of how much that leverage really is, if I want to buy, we do $300 million in business a year. You can't just say, okay, I'll take your order and take it. If the price goes crazy, you're dead. So we hedge every ounce we own. If I want to buy a 100-ounce gold contract, controls $130,000, it costs me $3,500. Now I'm controlling 130 grand. So what if I'm JP Morgan with $200 million in account to screw with? And I want to create my own perception of reality. I'll drive all the prices way down. I'll goose the equity markets. And now everyone's looking at the Dow and the S&P, but down here you have silver languishing in nowhere land. And no one's looking at it. And remember, most of the people who give financial advice, from Harry Dent all the way up to the financial advisors that run Wall Street, mutual funds, hedge funds, all the way down to the guy that owns the Edward Jones retailer in the strip mall in your hometown, most of them use technical analysis. So if I'm this big money center who's painting the tape, all I got to do is push the price down below moving averages and resistance levels, and what happens? Wall Street says, get out. Harry Dent says, bad, get out. Mutual funds and hedge funds sell, and everyone's out. And now all of a sudden I have this wonderful marketplace of subsidized prices and no competition that I can gobble up all of the physicals while all the suckers are misdirected over here looking at the pretty Apple and S&P and Dow, and misdirected just like in a game of chess where my pawn goes up here and my queen comes around to call checkmate. It's misdirection. Big money is misdirecting the price of commodities, not just precious metals. Look at all the base metals and fossil fuels. Do you think for a moment that China is not loading up on aluminum, copper, oil, gas? They're building a war chest to go along with their ghost cities that everyone laughs about, right? No one's laughing in China. They know what they're doing. They think in terms of decades. We think in terms of days. They are building a war chest of all of the world's commodities as everyone is being suckered into the next quarterly profit statement from Apple or Microsoft. They are gobbling up gold and platinum and oil and aluminum and copper and it all at pennies on the dollar by shorting the market and creating a perception of reality. And you know how they get out of it? They sell their treasuries to cover their short positions. So they use the dollars they're choking on to short the hell out of the market to create a perception of reality that allows them to gobble up all of the world's things, while the rest of us are transfixed on nonsense. And they gobble up all of the world's things at subsidized prices with zero competition, and then they will slowly sell their treasury position to paper over their shorts. And now they're out of everything paper, created their own perception of reality, and they own all of the world's things, while the rest of us are sitting thinking, what the hell did we do? And not think for a moment that owning some real wealth, some real money, was more important than the statement that we get from A.G. Edwards or whomever it is. My point to you is simply this. Price is the ultimate tool of misdirection, because if you mention The Big Short, or whatever it was called, I saw it, in that movie, when the heroes of that movie decided that something was screwy, what did they do? They did what none of you do. They got in their car and they drove to where the stuff was going down. They interviewed the stripper who had 6 houses. They drove through the neighborhoods that were supposedly up and coming and saw all the foreclosure signs. They lifted up the hood and they saw what was underneath the hood. They saw it. Most of us look at P/E ratio and that's all we need to see. We're done. Or we look at the price and say we're done. If you want to succeed, you have to lift up the hood. You have to do the extra. You can't look at the price. The price is the fake handoff and the screen pass. That's the truth. You got to forget about the misdirection. Do not look at the price. Look at the mathematics, the fundamentals, and the truth behind it. And the truth behind it is simply this. Why is it taking so long? Because this is a very high stakes game. And the big money, like JP Morgan, like the Chinese sovereign wealth funds, like Goldman Sachs, like HSBC Bank, they're all playing the game and suckering us all by manipulating the things that we think are wealthy or valuable, like the markets, and suppressing the things that we think are archaic remnants of the past, like real value, gold and silver and platinum. That's real. These things aren't real. And when it's all said and done and they do the ninjutsu move and flip it and let it run to the upside, we'll all be saying, damn it, I knew I should have done that. And that's the thing, we all go through our life saying, damn it, I knew I should have done that. Trust your gut, your intuition. If it stinks, it stinks. Trust your gut, and that's how we've stayed in business for 27 years in the 90s when it was impossible to stay in business as a gold company, because we trusted our conviction and held on because we knew where it would ultimately lead us. So, in a very long roundabout way, and I apologize for my animation, it's kind of my thing, that it's so obvious to me what's happening. We're all being misdirected and just focusing on price. And if you did nothing other than never look at the price of gold and silver again, but only the fundamentals as to why you should own it, it would make things a whole lot easier. And the same thing goes for the Dow and any of the other investments that will define the end game. So that's my answer as to why it's taking so long.
Mr. Schectman, can you go ahead and tell us a story about going through the airport with a suitcase full of gold?
Yes, I will. This is my favorite story. You can go sit down. Okay, so first of all, when people ask me what kind of gold and silver should I own, I always say you should own coins. Coins have a legal tender face value. If we're talking gold, anything really but the Krugerrand, because the Krugerrand doesn't have a face value. So I've been telling my clients for the better part of 20 years that when you travel through an airport, you can take your gold coins with you and not declare it when you go out of the country if you have under $10,000 face value. Now, it's easy for me to say that, but it's another thing to actually put it to test. And I've done that on multiple occasions, and I've always been right. But this time was a little bit different. So last June, I was asked by a very, very large client of mine to come visit with him in Montreal, where we have a storage facility with Brinks. This gentleman happens to own a very large pharmaceutical company, which he intends on selling, and asked me to come speak with him. So I did, and I flew up there and we chatted, and at the end of the conversation he said, my friend next door is being transferred to the United States. He'd like to chat with you. Can you help him? I said, of course. So his friend comes into the office wheeling a suitcase, and he says, I have 240 Canadian Maple Leafs in my suitcase. I'm being transferred to the United States. Can you bring it to your North Dakota depository? I said, sure, no problem. In the back of my mind, I'm thinking, I really don't want to carry his $300,000 of gold through the airport, but his buddy is one of my biggest clients. Okay. So I'm a vetted traveler with Homeland Security. I've been vetted by them. I went and did the meeting, and I have what's called global entry. Global entry means that you don't have to wait in that stupid line for customs. You just go right through. When I get to the airport with 240 $50 face value coins, that's $12,000 face value. And it's not mine, so I'm not going to screw around with it, of course. They're going to see it. So I say, yes, I have more than $10,000 on my customs form. And when I get up to the booth, the gentleman says, Mr. Schectman, what do you have? And I said, I have $12,000 in legal tender gold coins. Actually, that's 241-ounce gold Maple Leafs. I'm declaring $12,000. And the guy, now when you, by the way, when you check into Homeland or into customs in Canada, you go through U.S. Homeland Security there. So when I come into Minneapolis, I get off the airplane and I go. So I'm going through customs and immigration in Canada. So this guy's wearing a Homeland Security shirt, and he says, well, hey, that's way above my pay grade. You'll need to go to further screening. So he shuts off the light in his booth, and he walks me down this hallway that it's getting longer and longer and longer. I mean, it's literally into the bowels of hell, and the only thing that you're missing is the screecher music. And I get into a room about this size. It's all mirrors, and he says to me, sit down, do not touch your bag, someone will be with you in a moment. And I turn around and he's gone. And I'm sitting in this room all alone with mirrors. And you know they're watching me, and I sat there for a good 20 minutes. And they're waiting for me to shove things down my pants, and I'm sure. And when the guy comes up, he stands at the counter like this for 5 minutes, doesn't look at me. And we're the only two people in this room. It's this size. And they're probably all laughing from behind the mirrors. And then he does one of these. And he says, what do you got? And I said, I have 241-ounce gold coins. I'm declaring $12,000. They're $50 legal tender gold coins. And this guy says, United States Homeland Security Supervisor. He said, okay. He said, how much is gold today, Mr. Schectman? This was last June, so I said, it's $1,200. He says, okay. Isn't that $300,000? I said, yes, sir, it is, but look at the back of the coin. Do you see? It's $50. I said, if you took that coin right now out into the airport, into Tim Hortons, they would have to give you whatever you wanted for it. It's $50. Now, you'd be dumb and they'd be lucky, but go for it. It's $50. He says, I'm inclined to believe you, but I need to go get further clarification. I'm going to take this coin and go do some research. In the meantime, you fill out this FENSEN form. Now, the FENSEN form I'd never seen, because in all of my travels, 117,000 miles last year, all of my travels, I have never gone through customs with more than 10 grand face value, right? So when I go and do the conference where I see Daniel sometimes up in Vancouver at the Sprott show, the Sprott Global Resource Show, I will bring lots of gold with me, but I never bring over 10,000 face, which would be 200 ounces. So he says, fill out this form, and this form is something you never want to see. The acronym is something to the extent of financial enforcement. And it's like, how'd you get here? Why are you here? How'd you get the money you have with you? What's the purpose of it? Where did it come from? Who gave it to you? What's your social security number? And what's your firstborn's name? It's that invasive. And it was one of these things like, gosh, that somebody would be at my door on Monday morning. This isn't even my stuff. So begrudgingly, I fill it out. And I sit there another 10 minutes before he finally comes out, and he says, you know what? You were right. Here's your coin back. It is legal tender. Oh, by the way, how much money's in your wallet? And I said, oh, gosh, here we go. I said, $80. He says, you have any other money you want to tell me about? And I said, no. He says, are you sure? And I said, I might have some change in the bottom of my backpack, but that's it. He says, let me see the FENSEN form. I hand it to him. Tears it up. He says, you're free to go. Now, at this point, it's been kind of a rush, and I'm excited about it. But I said to him, can you tell me why I'm free to go? I mean, I don't mean to look a gift horse in the mouth or anything, but he says, you're right. It is legal tender, Canadian legal tender. You are entering the United States with $12,000 Canadian legal tender. Today's conversion rate puts that at $9,400 plus the $80 in your wallet and the change in the back of your backpack. You have $9,480 and change in your backpack unless you're not telling me the truth. I said, I'm telling you the truth. He says, you're free to go. So the moral of the story is, in a very long roundabout way, owning gold gives you freedom that other assets do not give you. I was able to enter the United States with $300,000 in legal tender currency. Because it was under the $10,000 face value, there was no declaration. My point to you is that you could leave the United States into Canada, into Western Europe, into Australia, into New Zealand. I would not try this south of the border. But you have $50 per 1 ounce gold American Eagle, per 1 ounce gold American Buffalo, per 1 ounce Canadian Maple Leaf, per 1 ounce Australian Kangaroo. It's not an ounce of gold, it's $50. And the relevance of that becomes very acute for any of you that travel in and out of the country. So that's the story.
My wife has made a similar pitch to me in regards to jewelry for the value that she can travel with.
That's true. It's very, very true. That if you had more than $10,000 in cash and didn't declare it, they would confiscate it from you.
And by the way, there are companies
You're
that
not
are
on.
offering, sorry. There are companies that are offering jewelry. They call it, it's high markup stuff because they say that you can travel with it, which is good, except it costs a lot of money. So there's pros and cons of everything, and that's what we're here to try to give you some angles of things that you haven't seen before.
Okay, I have a question for just general, if either Andy wants to take it. I follow the alternative media very closely, and I know that Deutsche Bank has admitted in a New York court of law that they have manipulated the silver fix. And the silver fix. And I believe it was in London on the LBMA. And I'm wondering what you guys' thoughts are about joining the fray of the feeding frenzy of all the shark lawyers that are going to be closing in on them and everybody that they turn over, because they've agreed apparently also to name other banks that were involved in this.
Well, there's obviously a lot of speculation about what exactly happened there. But remember, this is Deutsche Bank just coincidentally sold their seat on the London Bullion Exchange a year or two ago. Supposedly, they were being investigated for something, and what do you know? They were. And yes, what you're talking about is they not only admitted they were manipulating silver, but gold as well. In fact, on the same day, and they said that part of the settlement was that they're going to rat out all these other banks, which include Scotia and HSBC and JP Morgan, et cetera. Now, the fact is, do I believe that there's anything more is going to come out of that? No, of course not. I mean, my big thing is, how on earth were they allowed to say that? I mean, this was a major event. It's not, by the way, not the first bank to admit manipulation. UBS, 2 or 3 years ago, admitted, yeah, we manipulated the gold market, and they paid fines. No one seems to talk about that because that was during a bear market. Now we're in a bull market, so everyone's focused. My thing with that is, look, we know that Deutsche Bank's in trouble. Everyone knows it. You don't have to even see the speculation, how much derivatives they have. The fact is that their stock price, unlike all the other banks, is almost at an all-time low. Obviously, something is wrong. Someone is trying to distance themselves from Deutsche Bank, and I cannot believe the people who are so desperate to keep the price of gold and silver down would let this kind of admission come out, because this is really, really damning. And it came at a really, really bad time. It came as the Chinese entered, have their Shanghai fix. In fact, who took over their place in the London fix? One of the biggest Chinese banks. And you also had that fraudulent silver fix in London that happened at the end of January. I can't believe that they were crazy enough to do that. For those people who don't know what was going on, it was end of January. What they do is this fix, right? Appropriately named. Maybe 6 or 7 banks every day. At midday, they look at what the prices are. They look at, quote, what their physical orders are, and they say, here's what today's physical price will be. Why they don't just use the paper market price is beyond me, but they do that for some reason. They've been doing it forever. And that particular day, they decided the physical price should be 6% below what the paper price is this very minute. And that very day, a bunch of the miners left the LBMA, and then you had the Deutsche Bank manipulation admission a few weeks later, and then the Shanghai price fix. So you have a lot of things that are building up against the people trying to hold the price down. What went on in Deutsche Bank? All you need to know is that the fact that that was allowed, you talk about misdirection, okay? The fact that that was allowed to be admitted, because believe me, the U.S. government, the Federal Reserve, they were very, very aware. They were made aware that Deutsche Bank's going to admit this. And they could have come in and said, nope, there's going to be a settlement here, this is going to be quiet, but they let that happen. And you talk about a blaring red signal in front of your face that the worm is turning, that's it.
Well, but also to answer your question succinctly, my good buddy Jim Sinclair is spearheading a class action lawsuit, but it's only for the producers at this time. It's not for the rest of us who've been screwed by these guys. It's the producers, the miners, actually, at first. So I personally wouldn't get on that list if I were you. I think it's sometimes better to just stick your tail between your legs and let them get their own, because life is a big ball of karma. What goes around comes around. They'll get their own. And the only way to beat these guys is to realize, they're not the first ones to admit manipulation. J.P. Morgan and American Barrick admitted it in federal court in Louisiana about 6 or 7 years ago, where they were accused of manipulating the price of gold, and they said, no, we move for dismissal. And when the judge in federal court in Louisiana says, well, there's more to it than meets the eye, we're going to go to discovery, they said, fine, we did it. But we did it at the behest of J.P. Morgan, who's done it at the behest of the U.S. government. Therefore, J.P. Morgan has sovereign immunity, and this was the counsel for American Barrick. They say, by extension, we claim sovereign immunity. Now, the result of the case was sealed. But what you take away from it is that the largest gold producer in the world admitted in federal court they've been suppressing the price of gold at the behest of the United States government. That's what you take away from it. So you got that. You got, as Andy said, there's so many examples of this manipulation, but to join in and try to jump on, that is not going to serve you well. It would be better just to take your gold and kind of just...
Well, no one benefits from class action anyway, other than the lawyers, and I don't even know how you'd prove it. But, the way you can benefit from it is, as I said, take the signal there of what's going on. Clearly, someone is allowing this information to get out that normally would not. And, my take on it is because they know the price is going up.
And did you see, by the way, Deutsche Bank there was an article in Zero Hedge. Deutsche Bank is offering 5% interest to new depositors but you have to do it right away. This is in a sea of negative interest rates. They're in big trouble. They're dying for some help and some cash. To offer 5%, our business was founded on Swiss investments. Every single Swiss company I've ever worked with since 1989 has sent letters to their depositors. All these Swiss insurance companies that we did Swiss annuities with in the 90s, that's how our company started. We did Swiss annuities, and then realized the same person who bought Swiss francs bought gold. So all these Swiss annuity companies that have been around for 100+ years and never had one company fail. In the United States, hundreds have failed in the last 20 years. Not one company has ever failed in Switzerland in over 100 years, and every one of them are sending their deposit or their annuity holders letters. Get this, you have $1 million annuity. You just got a letter from Forces Vives in Zurich saying we'll pay you a 4% bonus if you cash out your annuity. So they're going to pay them $40,000 to cash out. That's how hard it is to make money in fixed income in Europe. And here's Deutsche Bank offering 5% after they just admitted to manipulating gold and silver. And after all this stuff is happening, little pinpricks all over the place keep happening. Trust your intuition. Things are happening around you. Deutsche Bank is just another little pinprick in the ultimate deluge when the whole thing pops.
And my intuition about Deutsche Bank is that it is going to be the Lehman Brothers of Europe, except a lot larger.
A few minutes ago, you mentioned something to the effect of look at the fundamentals of gold. What are the fundamentals of gold?
I mean, I'll let Andy answer that, but I mean, when people ask me that question, I just simply say one thing. To me, first of all, as Daniel said, we'll both answer this. As Daniel said, gold is not an investment. Gold is money. It's been wealth for 6,000 years. King Tut didn't call his gold broker, nor did Queen Elizabeth or King George. They own gold and silver as a form of immutable wealth. It's time-tested, immutable wealth. But to me, it's not so much what are the fundamentals of gold, but what are the fundamentals of the U.S. economy and dollar. We have a $19 trillion debt, and by the government's own admission, close to $200 trillion in unfunded liabilities. A trillion seconds ago was 31,688 years ago. How the hell do you pay off the debt? In an economy that's lost its manufacturing base, we don't produce anything anymore. I, as a business owner in the state of Minnesota, get this, okay? So should I expand my business? We did $300 million. Should I go hire a bunch of people? And the state of Minnesota, I am charged 10.5% state income tax, top tax income tax bracket. 10.5% plus double FICA, 7.5 twice, that's 15. 10.5 plus 15 plus 39.5% federal. I make 33 cents on the dollar. This is not, and I'm supposed to be a small business that hires people, right? This is not the environment from which recoveries are born in a country that lost its manufacturing base and taxes the wealthy. So it's not what are gold's fundamentals, which are screaming. It's what are the ill, putrid fundamentals of a dollar that is on its last gasping breath. And the question you should ask yourself is not how much gold you should have, but what should your exposure be to the U.S. dollar? You know, you talk about diversification. You can have a really well-diversified portfolio of a whole bunch of asset classes, but when it all comes back to it, it's in dollars. So my question to you is, are you diversified or are you all in dollars? My point is the fundamentals for gold are the opposite of the fundamentals for the U.S. dollar. So, and when I say gold, I mean silver, I mean platinum, I mean mining shares, I mean all of the things that are associated with gold. And I don't mean to monopolize any. I just want to say one last thing, and I'm going to let him answer what are the fundamentals for gold. I get going sometimes. Diversification is a tool it's a tool, it's a term invented out of fiduciary responsibility by financial advisors. If you diversify your portfolio, you're just average at best. You're the best of the worst or the worst of the best. Instead of taking the shortcut and being diversified, letting your financial advisor diversify you, that's crap. You're lazy, okay? We've all been held accountable for our actions from the day we were born until the day we die. Take accountability for your finances. Pull it away from an advisor and take accountability. And don't be diversified, okay? Did he just say that? Yes, I said that. Don't be diversified. Identify the primary trend of the market. What is the primary trend? To me, it's a falling dollar. So instead of being broadly diversified, which is the lazy way out, identify the primary trend. As Richard Russell, my mentor in this economy or in this industry, once said, identify the primary trend and then broadly diversify within it. Gold, silver, platinum, mining shares, agricultural land, oil and gas stocks, you name it. You're broadly diversified within the primary trend of a falling dollar. So it's not so much what are gold's fundamentals, but what are the fundamentals of what we call money. What are the fundamentals of the dollar? So, Andy, take it from there.
Right, and of course, Richard Russell, the great Richard Russell, passed away last year, I think at the age of 93 or 94, who was my original mentor. In fact, it was him and Jim Sinclair were the two first, and Gatta, the first people I ever read. But does anyone know what the most famous thing Richard Russell said, the most prescient 3 words he ever said? I'm sure someone could shout it out. Inflate or die. Inflate or die. And he was saying that back when no one was even thinking about what's going on today. Even when I was reading, when I got into gold, silver back in 2002 or 3, I was just thinking, this is the dollar will go down, whatever that meant, and I'll make millions in mining shares. I wasn't actually thinking of what he was talking about. He's talking about QE and negative interest rates, and he was dead on right. And Andy's exactly right. Well, anyone who reads me knows that I don't diversify. I have almost all my cash in physical precious metals, and I don't believe in paper assets anymore after a lifetime in it. You know, you can make your own choices, but as Andy said, you need to, the most important investment choice you can make is to understand the big picture. But as to the fundamentals of gold, and again, fundamentals is a kind of an ambiguous term, but I'll just say it in terms of, hey, I was a Wall Street analyst for many years. I was an oil analyst. I'm a CFA. I do that stuff. Whenever I can get it into my blog, I try to do it rather than platitudes. I actually love to do analysis. The powers that be have destroyed that business, but I still have that skill. And when it comes to gold and silver, it's simple. Like any other commodity, you have supply and you have demand and you have inventories. It's that simple. There's three things. You look at any business in the world, I'm sorry, Houston, oil is the perfect example. Way too much money printing, way too much investment, and some amazing technology, and guess what? You have oversupply. And the oversupply, unfortunately, of almost every commodity and many other services and governments themselves is acute. It's never been more anywhere. But guess what, quote, commodities are undersupplied? Gold, silver, and platinum. Platinum for a different reason, because it's mostly produced in South Africa, and they have all kinds of social issues and electricity issues, and it's just a bad place. But gold and silver, the reasons that you have undersupply is because the price was suppressed for so many years. There's a reason why I left the mining business. I'm not talking about whether you want to own mining shares or not. I left the mining business because it's the most difficult business in the world, and I watched the government destroy the ability of it to stay alive. So you can make money investing in the right situation, but as far as the outlook for production of gold and silver, we have actually, people use the term peak oil certainly down here all the time, which is kind of an ambiguous term, and it's really, there's no such thing as peak oil. There's always going to be technology that gets oil out of the ground. But in the case of gold and silver, there really is peak, particularly gold. We had the peak level of production probably a year or two ago. Barrick, as we're talking about now, they are producing. They're the biggest producer in the world. They are forecasting 25% decline in production over the next 4 or 5 years. And I've seen other analysts, such as at JP Morgan, for instance, say it's going to be even more than that. And Newmont, the second company, also expecting lower production, et cetera, et cetera. This is the problem when the government suppresses price and no money has been invested in. And, by the way, it's gotten like oil. Down here, we know that you no longer get most of it onshore. You have to go offshore, and it's very expensive and difficult. The same thing has happened with gold. And on top of that, since gold is actual money to these governments, they have the most onerous tax schemes. They want, the only big gold discovery I've seen in my 14 years was down in Fruta del Norte in Ecuador. They still haven't produced it because the government wants 75% of the take. So my point is, supply falling, demand all-time high. There is no way anyone can refute that, quantitatively speaking, as we speak, the level of demand in the world is at an all-time high. In fact, I just saw the other day that the amount of money going into ETFs in the first quarter was more than at any quarter since the height of the 2008-9 crisis, when, by the way, the entire industry ran out of gold. Andy could tell you about that. The Chinese are buying, the Russian are buying. Look at the U.S. Mint figures for silver, off the charts. Indian, even with the tariffs that their crazy government in India put on, record imports of silver and near record imports of gold, and these are the biggest buyers in the world. So there you have supply and demand, and then the last piece of the puzzle is inventories. Now, inventories in gold and silver are very, very hard to find because it's so opaque, and a lot of it is on government balance sheets. But the stuff that's out there, for instance, you look at the COMEX. I mean, some people say, well, yeah, they have a disclaimer that all the information we give is not true. But I assure you, the people at the COMEX, the last thing they want to do is show that they have little inventory. And guess what? They're showing an all-time low level of inventory in silver and close to it in gold. You look around the world at the amount of inventories are out there. You look at the amount of demand there is, and you realize that it had to come from somewhere, and it clearly came from places like the Fort Knox, 8,133 tons. In fact, we've had several Fed chairmen and big bankers admit, the Bank of International Settlements, for instance, that they were selling gold. So the point is, fundamentally, from an analyst perspective, never been better. And the last point I'll make with silver, by the way, is that 2/3 of the silver, unlike gold, 2/3 of the silver produced in the world is byproduct of base metal mines, copper, lead, and zinc. When I talk about an oversupply of oil and all kinds of other commodities, all that money, that Wall Street money, that free-fed money that was fed into the industry to build things like ghost cities, well, it built a lot of mines of copper, lead, and zinc that won't be needed because the prices are down. And so you're going to not only see the primary silver mines not be able to produce, you're going to see a huge drop-off in production from the secondary mines.
The next question is for Andy Hoffman, and I see you guys in the front. I'll be making my way around just so everybody gets their questions out. But just give me time. We'll work the room.
With the revelations coming out about gold and silver, is Bix Weir a genius or batshit crazy?
That's a good question. Crazy. And Bix is a very, very good friend of mine and Andy's. And by the way, we're going to have a break at some point, probably an hour and a half in for 15 minutes.
Yeah, about 30 minutes.
Yeah, okay. Actually, that's a fantastic question. Because,
there's a fine line between the two. You know.
And we are all straddling it. Many will say that ranting Andy's there too. It's funny because I know Bix all the way back from GATA. When I started reading, Bill Murphy back in 2002, he was already there. Him, Bill Holter, a handful of us were already there way back when. And a lot of what Bix talks about is speculative. Okay, and anyone who reads or listens to me knows that I don't like to go there. The thing is, because there's no proof, and I'm an analytical type. The thing is, the way the conclusions he makes of what you should do as regards to what they're saying, I 100% agree with. So I really don't care how he gets there. But there's plenty of conspiracy theories out there that are true. It's just that we don't know which ones are. Road to Root is this big one. Is it true? I have no idea. Frankly, I doubt it, but maybe it's true. I don't know. All that matters is that you say you're looking for the good, smart people, okay? Look for the people who are telling you to do the right thing, and I really don't care how they get there.
I'd like to add that in a world of monotony, Bix is a refreshing breath of fresh air to me. Yeah, he's a little cuckoo in some of the things that he says, but I happen to think that he's more dead on than he is cuckoo. And, a lot of the things that we've said, when I started speaking publicly about 7 or 8 years ago, and I would talk about manipulation, I'd kind of say manipulation, and, because you feel like an idiot. But the truth of it is that there is a fine line between reality and conspiracy, a really fine line, and that line is becoming more and more blurred by the day. And so, regardless, as Andy says, of how Bix gets there, I think his conclusions are pretty well centered, and he bases his thesis upon a comic book and the theory that the Boston Fed is telegraphing to us what they're doing because there's some good guys and some bad guys. Regardless of whether it's true or not, I think it's refreshing. And he is a good guy, and he does mean well, and he is pointing you in the right direction. And you know what? There are a lot of things that if you would have told me 10 years ago that the Swiss would join the United Nations and sell their gold and delink gold from their constitution and do all of these things and peg it to a euro, and I'd have said, you're out of your damn mind, I'll bet you $1 million. Well, lo and behold, here you have the Swiss that have pegged their currency to a euro, joined the United Nations, and sold their gold. So, in the end, I don't know. But I think he's a good guy, and he's worth reading. I do.
Next question is from a self-identified stacker.
Thank you for being here. I have to say that I read your daily missive, very, very intrigued by it. Between you and Turd and Holter and the rest of you, I've learned an awful lot, but I'm now in the position where I'm comfortable with what I hold in precious metals, primarily in silver as opposed to gold. And I'm concerned about what I'm going to be able to do when the system decides they're going to either one, tax me out of existence, or two, remove the legal tender status of American Silver Eagles and American Gold Eagles, so that, as they did back in the 30s, where it no longer is a legal dollar figure, and so being able to carry it out of the country as declared at the legal tender basis, that option would be gone. And we all know that the government can do that with the stroke of a pen. How often, how likely do you think that is to happen? And two, what can we do to prepare ourselves for that eventuality? And you have to remember, you're dealing with American citizens, and I'm also concerned about, I don't have the flexibility to be in and out of the country very much.
Okay, so we're both going to take a stab at this. I'll give you my 2 cents on it. First and foremost, in 1933, April of 1933, President Roosevelt, in his first act as president, declared that gold would be confiscated. The difference was, in 1933, every one of us in this room would have had gold in our pocket. Every one of us. Because it was money back then. Now, most of the people I've known my whole life wouldn't know a gold eagle if it fell on their foot, right? Or a silver eagle if it fell on their foot. And I think that confiscation by our government is akin to a death sentence. Let me just elaborate on that for a moment, and then I'll let Andy answer it his way, which I know he's going to answer it very succinctly, because we get asked this question a lot. But in a world where we pride ourselves at being the world reserve currency in the center of free trade, if we were to enact Venezuelan-style nationalization of assets, it's game over. Game over. Shut off the TV and go to sleep. It's game over, right? So instead, I think what they did, our central planners, is they came up with 2 funds called GLD and SLV. SLV is the second largest stockpile of silver in the world, administered by guess who? J.P. Morgan, who holds not only the second largest stockpile in the world administering SLV, but the largest stockpile of silver in their house account, right? So they're holding both of them. GLD is the 5th or 6th largest stockpile of gold in the world, regardless if it's all there or not. Held by HSBC Bank, another one of the crooked cronies, right? So instead of enacting eminent domain and creating the, let me just say it, I'm sorry, the shitstorm that would create across the globe like that, our creditors would dump treasuries so fast, interest rates would go double-digit overnight, and dump dollars so fast that you'd wake up tomorrow morning and would not recognize what you saw in front of you. So instead, how about we create these 2 funds? Now, I said read pages 6 through 8 in the prospectus of those funds. You'd be blown away if you own those 2 funds. Grab a glass of wine and sit down, print out the prospectus, and read pages 6 through 12, I think. Titled Risk Factors. Read them 3 times. And if you don't sell the next morning, I'll buy you a gold eagle. Here's the thing. In the prospectus, aside from all the nefarious other things it says, it does say that you and I can never be paid back in gold or silver, so we get paid back in cash. So on a Friday night, they say, we're going to close these 2 funds, and the $1 million you have in each of those 2 accounts is now centered in your money market Monday morning when you wake up. And they look the world in the face and they say, what? What? We didn't take from our people. We didn't activate eminent domain. We're the center of free trade. We closed 2 accounts. Says it right in the prospectus. In fact, you can still go buy gold and silver from anyone like Miles Franklin if you'd like. My point to you is simply this. Prior to 1933, gold was money. It was in your pocket. You would go to the grocery store with a $3 gold coin or a $1 gold coin or a Morgan silver dollar or a $5 Liberty or a $5 Indian. You would go and that was your money. Prior to 33, that was what we had, but now no one owns gold. I've owned this company since I was 19 years old. And I've grown up in Minneapolis with a lot of very successful friends, and I can count on one hand the number of people who talk to me about gold and silver. And I made a decision long ago, after going through many years of that crap, being that guy who ruined the party, you know, talk about the shit hitting the fan. I learned long ago to stop that, right? So now I just am the guy who's enjoying the party until someone asks me about gold. Well, I'll talk to them. It never goes over well at a party for those of you that want to talk about gold and silver. You know, they'll never get invited back to that party. So the bottom line is that, you know, I learned long ago, you just let the chips fall where they may. But as far as confiscation is concerned, I don't think it's going to happen. How's about that? If I really wanted to be a gold company that would capitalize on that, I'd say buy numismatics pre-1933, safe from confiscation, and I'll mark them up 3 times what I do gold bullion. I'd love to sell numismatics at that rate because I sell lots of gold bullion and make hardly any money. But if I sold you numismatics, I could do 1/3 of the business and make more money than I am now. My point to you is simply this. Confiscation was easy to do when it was part of our money. It's not anymore. Now it signals the U.S. has flipped and they're confiscating assets from their own people. So if you're a buyer of U.S. treasuries or securities, are you going to trust the government to not screw you? They're screwing their own people. Of course not. So instead, let's create 2 vehicles that attract all the big money, the Paulsons, the Soroses, all these big hedge funds, in one location with a giant pink bow wrapped on it, held by the 2 crooked sons of bitch banks that could just like that say, it's ours now. But you have our brand new printed dollars in your bank account, so you're good to go. So confiscation's not going to happen, I believe, unless it's checkmate, unless it's over. And at that point, as Andy's going to tell you right now, I guarantee you he's going to say, what would you rather have, worthless dollars or counterfeit black market gold? That's what he's going to say to you right now. And what would you rather have if the shit, I'm sorry I keep swearing it, but then that doesn't go over well. But if that was hitting the fan, do you want worthless paper? Like everybody else, like in Weimar Republic when they went to the store with a wheelbarrow full of money to see if there was any bread, and when they came back out, the wheelbarrow was gone, but the money was there? Do you want that, or do you want gold and silver where you have to transact with people quietly and don't tell the authorities? I would take my chances that way. I don't know about you. I have a feeling that's what Andy's going to say right now.
Andy, real quick, being a Texan only for 2 years, I can tell you the confiscation would not go well. The Texans would give them brass and lead.
That's the whole point. Why go door to door and risk all these NRA people who are going to say, I will kill you before you take my property? And, you know, patriotism is a whole different breed than it used to be in the 30s than it is now. Patriotism now is you come in my house, I'll kill you. And that's exactly what people who own gold and silver and precious metals and guns will do. So the Fed knows that. The people in the know that. So instead of creating that situation, how about we just create these 2 giant funds that suck in all the dummies, that put all their money into GLD and SLV instead of buying the real thing. And one last thing before Andy tells you, I'm sorry, Andy. I really am sorry. Honestly, I mean this. I'm sorry. He's the smartest guy I know. He's so much smarter than I am. And but I'm passionate about a few things, and this being one of them, and that is this, that, you know, look, they're not going to come into your house. They're not going to take your stuff. It's not going to happen. Bottom line is they're going to go after these 2 big funds that suck in all the money, the big money, and they're easily taken without having to enact, violate civil liberties, break laws, create a backlash that they cannot recover from. And it'll happen in 2 easy swipes of GLD and SLV, and they would now be sitting on the largest stockpile of silver in the world and a giant pile of gold, and they could look the world in the face and say, what? We didn't do anything. So I just think that that's not your biggest problem. It's about number of ounces. Keep stacking, and just hope for the best. And if you have to prepare for the worst, I'd rather be a criminal in that environment with contraband gold than a sucker who turned it in and be stuck looking to feed your family with worthless paper.
Okay, I was just checking the battery of my microphone because I'm going to use up a lot answering this question. I was set up with a lot of softballs from you, from Daniel. I was about to talk about the Texas Depository, which is about to be opening at the end of this year. Now, I'm not talking specifically about secessions, et cetera, but I did write several years ago that just like Europe's going to break up, when things get really bad here, all the different cultures and finances and all different kind of things are going to break up here too. And of course, there's no state that has more potential independence from its energy and more history of independence than this one. So I would think it would be the first to go. And I've seen the petitions come on and off. And of course, as soon as the economy and the markets go down, those things are going to heat up here and in other other places. And the fact that there's this giant depository, which will be open probably by the end of the year, leads me to believe that a lot of people in Texas are going to be using it. And if I were living here, I would probably be using it too. The second thing Andy's talking about, I had to just bring it up about, don't talk about it at parties. One of the first articles I wrote when I started Miles Franklin, which is almost 5 years ago now, and you can Google it, just Google friends, family, and colleague, or maybe it's family, friends, and colleagues. But of course, you have to write Miles Franklin after it because it's a pretty popular term. I long ago learned not to try to talk to people who don't want to listen. And that's most of the people, including my mother and relatives and most friends, do not talk about it with anyone who doesn't talk about it first. And thank God, because of my job, I have a lot of people that want to talk about it. And there will be more each day. In fact, every time gold goes up in price, all of a sudden, some people want to talk about it. But that's a separate story. To answer your question about confiscation, Andy said I'll answer it succinctly. I will, with 2 words. What if? That is a what if question. All these things we talk about are assuming normal circumstances. Andy gave a fantastic depiction of his story in Montreal, which in this snapshot in time, he escaped without going to prison and without having his client's funds taken away. But they can take that away in a second. Just like when people say, well, you should buy the pre-1933 numismatics because they couldn't possibly confiscate them. Well, the 1933 decree said that, but this is not 1933. And by the way, 1933, we didn't have a fiat currency and we didn't have any national debt. So again, all these things can dissipate in a second. And they will all dissipate in a second, which is why you need to again, be accountable for yourself. Think about, what do I want to do? How am I going to prepare? It's not just buying gold and silver. It's some people like to prep. Some people like to move. I wrote an article years ago, Google it, protection continuum. Everyone has their own way of preparing. I say a 1 out of 10 is move into Manhattan and put all your cash in Citibank. A 10 out of 10 is move to a desert island, bury gold in the sand, and forage for food. Only you can know what's best for you. But as far as confiscation, if anything, look, I wrote in this article, as Andy said, probably the best article I've ever written, probably written in 2012. It's called Priceless Precious Metals versus Worthless Dollars. He's exactly right. And what I'm saying is, our government doesn't do anything proactively. They react to it. That's why in early 2009, they were debating in the House of Representatives whether they should confiscate IRAs. And I assure you, if the Fed hadn't been able to save the day with its money printing and the PPT and all that, they would have done it. And then, by the way, the MIRA that was created, the My IRA, that's the perfect vehicle to do it. And I assure you that the next time, though they lose control of the markets, they'll be back in Congress thinking about how can we save ourselves. Oh, we can go back to that IRA bill, and they'll do it. Everything is reactive. They can do whatever they want. But the one thing that they can't do is get into your house and get your gold, especially if you have a gun, and particularly if you don't really have that much. It may be a lot for you, but it's not a lot for them. And like Andy says, if you really wanted to confiscate gold, which would not only be suicide, it would be the end of the world. We'd have already passed the chaos stage. The dollar would have collapsed. There'd be wars out there, social uprising everywhere. And then they'd say, oh, well, we got to go get gold because the dollar is trashed and we have nothing left in Fort Knox. Well, we can get SLV, we can get GLD. If they're in Canada, they can get the Central Fund of Canada. But again, I wouldn't worry about any of these things. Just think about the worst case scenario. And, and if you're prepared for it, it doesn't cost you anything. But I assure you, if they were confiscating gold, you would be thrilled to have it instead of the worthless dollars.
Look at all the people that smoked marijuana before it was legal. I mean, that's a bad example, but the point is the same in that when it comes down to it, you're gonna take care of yourself and protect yourself regardless if they confiscate gold, regardless if it's illegal. It's more important to own it than base your decisions upon what could happen.
This next question is very important. We'll do this question and then take about a 10-15-minute break. It's quite a doozy, so I have a feeling this one might go long.
Well, I don't mean to make it a doozy, but I listen to all of y'all very frequently, and y'all talk about owning metals, owning them in your own possession. Don't don't buy the ETFs. So you own them. If you don't live in Texas and this depository comes to pass, where do you hold them? Do you have facilities around the country? What are the best places to store them? And then the other side of the question is, so you hold them in your own possession. When is it the time that we look to take those gains and cash them in? I hear all of y'all talk about, I buy them, but I never sell them.
I think that's
When do
a
you
great
sell
question. That's a really...
So there's a lot of questions here, but that's a good place to start, because I think a lot of people want to know these answers as well.
So,
in the pre-question, you also asked about mining shares. That's why I thought there might be some fireworks.
Thanks.
all right, so I'm going to take a stab at it and let Andy ask it too. As far as mining shares are concerned, just off the top of my head, I'll tell you I've been buying them for the last year and a half strongly. And I think that when this market pops, you'll make more money in mining shares than anything you've ever done in your life. I do believe that, because they've been beaten down that badly. I'll just leave it at that. As far as where do you store your gold? Well, first and foremost, keeping it home, you don't keep everything in one safe, right? You don't keep everything in the one safe where someone comes in, they find it. Maybe you have a decoy safe, where you have a safe in your office or your basement that has enough stuff in it to appease someone who comes into your home and threatens you. But the little itty bitty handgun safe with 2 bolts that you can bolt to a stud in your attic under the insulation or underneath the floorboard or behind a piece of sheetrock that you cut out and bolted it to a stud and then put the sheetrock back on and mudded and taped and painted. Now, if you need to get into it, you'd take a hammer and beat the crap out of the wall and get it, but it's there, it's hidden. And that one safe in the office, God forbid someone comes in, you open the safe with trembling hands, say, don't hurt me, please, take it. Don't hurt my family. And there's enough stuff in there where they're happy. But if all of a sudden you wake up one night and the sweat's beating down your brow, and you say, what the hell? I got too much money in here. And that's happened to me because I own a company and have 3 children. And there hasn't been a day that I haven't pulled into my garage in the past decade where I am not feeling for my gun and looking on both sides, because I unfortunately have to deal with that reality as the owner of a company that does a few $100 million a year in business. But you guys don't have to worry about that, because number one, you don't tell anyone you own the gold, period, except your loved ones. And that's it. And then you hide it real good. But if you wake up with that sweat beating down your side of your forehead, what am I doing with all this gold here? Yes, there are places you can store it. You can bury it in your backyard in a PVC pipe 2 feet down, vertically, not horizontally, vertically. 2 feet down with a rubber cap on a PVC pipe, there's hardly not a metal detector on the planet that will find it. You can become a midnight gardener. You can send it to a depository. We happen to work with a depository hand in hand in North Dakota. My business is in Minneapolis. I choose not to go to work with the AR-15 every day, so I work in a big office building, and all of my gold, $25 million worth, is held in a vault in North Dakota, the Dakota Depository, a level 1 military grade vault, staffed by ex-military. And I have 5 full-time employees there that do nothing but send stuff out for me all day long and receive stuff. But you can store your stuff there. It's fully insured by Lloyd's of London, and North Dakota is pretty much the epicenter of nowhere. Right? So when you talk about all of the things that could happen, well, most of the vaults are on the East Coast, right? And if something's going down, it's in Manhattan, where Brinks has most of their facilities, in JFK or in Manhattan, or perhaps Delaware, where all the other facilities are. If you want to be off the grid, well, here's a good spot, Fargo, North Dakota, with the Dakota Depository. Or our Brinks facilities in Montreal or in Vancouver. Now, I'm going to say something right now that if the folks at Brinks know I was saying, they would probably decapitate me. So this isn't a guarantee, okay? We're working very hard on something. We have a really great relationship with Brinks. We are their fastest growing client outside of a bank in all of North America in our Montreal facility. So they were eager to open up a Vancouver facility for us, which we opened up a few months ago. So now we have segregated storage in Montreal and Vancouver, and I was doing an audit of the facility last week in Montreal where I met with the president of Brinks North America, and I said, gee, Steve, buddy, I said, you know, I'm asked this question a lot. I'm asked this question like, can we ever get someone to have safe deposit boxes in Brinks where they hold the key? Because it was always no. Well, after they saw how much business we gave them, and the reason we've given them so much business, by the way, is that our storage facility with Brinks is different than any other storage facility you'll ever find, for the most part. There's one in Singapore that is modeled after us, and that is that we charge on the number of ounces you store, not the value. Every other facility that I know of in North America will bill you on the asset value, a percentage of the asset value. And the reason they do that is that the main expense in storage is insurance. And the higher the price goes, the higher the insurance cost goes, et cetera. Well, Brinks has an insurance policy that is higher than anything you can imagine, and they have all this room. So I negotiated with them to let us do it on the number of ounces you guys store versus the percentage of asset value. And this went back and forth for a year, and finally I said, fine. Okay. So they gave us a 1-year contract. Within 6 months, we grew so fast that they bumped us up to 2018. And now they are very close to considering, for those of you who are privacy nuts, allowing us to be the only, this cannot leave this room, hit pause. We will be the, oh, you don't have to hit pause. We'll be the only insured safe deposit box in all of Canada, and for that matter, pretty much anywhere, whereby you can send your stuff up to Brinks Vancouver, whereby it's opened under camera. If you don't deliver it yourself, you could, but if not, you send it through our assistance. They open it under camera, record what the contents are so we can insure it. They put it in a box and send you back a key. You're the only one who owns it. We don't ever audit it. It's yours, and you're the only one who owns it. And by the way, if those of you who own gold offshore, there's a stupid law called FACTA, and this law is really stupid, and it's why the rest of the world has turned their backs on us. All these Swiss banks who kicked all the Americans out try to open up a bank anywhere across the world, and they say, well, you're from America, screw you. You're from Canada, we'll open it up for you, but U.S., no. And it's because of FACTA, which is incredibly intrusive and anti-American as far as I'm concerned. But anyways, FACTA says if you own gold out of the United States, it has to be, in order for it not to be reported, it has to be held in a non-financial institution. Well, that's what Brinks is. They're not a bank or a brokerage. They're a logistics company and a security company directly held. Now, by my estimation, directly held means segregated. By my attorney's viewpoint, that's exactly what it means. By some of my competitors, like the Hard Asset Alliance, that send newsletters to 1 million people, they say the same thing. Their program's the same thing. Directly held meaning held in a segregated account. But the kicker to that is that the IRS uses in their example a safe deposit box. And when I spent thousands and thousands and thousands of dollars with my attorney to get the IRS to tell me what they consider as directly held, they more or less told me to piss off. We're not going to answer it for you. So, if you want to follow the law to the letter and get money out of the country that nobody knows about legally, very, very soon you can contact us, send it up to Brinks Vancouver where it's held in a safe deposit box that legally it is off the grid 100%. Nobody in the world knows about it or has access to it but you. As it is now, I would say to you, it's the exact same thing. The only difference is that if I wanted to go to prison, I could forge your signature and say, well, he told me he wants to have 4 ounces shipped back to the United States. So I'd ship them back to my account, whereby Brinks has records of everything that I just said, including the registered mail that comes to my account. And now you say, where's my 4 ounces of gold? And they do a little research, and I spend my time in a cell next to Hannes Tulving. My point to you is simply this, is that we've gone a great length to make sure that you can send your gold out of the country or store it in North Dakota or in Canada privately, safely, securely. But if not, you bury it in your backyard, you put it under a floorboard, you stick it in your attic, and you don't tell a soul. Because I could have 10 ounces of gold here and 10 ounces of gold here, and none of you would know it. Yeah, I'd have a little bulge right here and a little bulge right here, but I'm walking around with $35,000 in cash and you'd have no idea. It's easy to store. Try to do 35,000 bucks in silver, it's going to weigh 120 pounds. I'd have some serious bulging in my pockets. So my point to you is simply that, yes, store it as much as you can before you wake up with sweat coming down your forehead saying, what the hell am I doing with all this money under my roof? And if it comes to that, we can assist you with some serious, private, safe, insured storage, whether it be in the U.S. or in Canada. And it's the one issue that owning precious metals that we all have to deal with. You all don't own a gold company. You're off the radar. You're less of a target than you'll ever imagine. And a little bit of gold, 100 grand of gold, I could have hidden in my sport coat right now. It's that easy to hide it. So start at home. If it becomes a problem, we can help you offshore or domestically.
Right, and I'll answer the second part of the question, give you a breath. And first of all, when you ask about whether you should, where you should store it, look, 99% of the people in the world that own gold or silver, whether it's in the form of coins or jewelry, hold it on their own in their house. I mean, 99%. It's only the 1% that own 90% of the gold, like the central banks, that need a place to store it. So there's a fine line. There's very few people who actually need offshore storage. I'm a perfect example. I am a high-profile owner, as is Andy. Certain people who are renters, expatriates, people who plan to move around a lot. There are reasons. Or, as Andy said, someone who just wakes up in a cold sweat knowing that they have value in their house. I would counter the fact that if you do it the right way, meaning, hide it the right way, have dogs, alarms, only tell need-to-know people, that kind of stuff, how on earth is someone going to get in your house as opposed to a bank where they can just bail you in, bail you out, charge you negative interest rates, and take your money that way, bank holidays. So again, I wouldn't worry too much. You'll hear fear-mongering about don't keep it at home, but I'm far more worried about having money in a bank, which is why I don't. As for the second part of the question, when do you cash it out? That comes under the what-if situation. Again, gold and silver, the reason I hold it is not because I'm investing. I mean, I am holding it because I know that the currencies that they're valued in will go down from the dollar all the way to the Zimbabwe dollar. But I don't think of it in terms of when am I going to sell it. I think in terms of if you give me a choice, an alternative of something that's worth trading it in for, then I will do it. Maybe one day that will be a currency that's backed by something that makes me confident. Maybe there will be a great real estate deal, or stocks will be so low that I trust them and want to do it. But I don't think in terms, it's like no one has ever asked you before, well, when are you going to cash in your cash that's in the bank? I mean, that's money, right? No, you just keep it there as savings, and one day you'll determine what the right situation is for when you'll trade in for something else.
Real quick, that is a great point that you distribute your cash to acquire other assets. It's the same thing with gold and silver. You have the gold and silver, they're considered a cash position. I did also want to comment on the midnight gardening. I almost broke my foot doing it. So if you're going to bury a safe, don't bury a big safe. We were planting about 20 fruit and nut trees. I had all these guys digging holes all over my yard. I was like, this is the perfect time because I don't want to dig these holes. So we had put some in some Tupperware under 3 trees, I believe. Actually, when we were leaving California for the last time, my wife's like, I think it was 4 trees. I'm like, no, it's 3. And then I was leaving, I was like, maybe it was 4. I don't remember. But my wife and I, we did the whole midnight thing. We had the safe. The hole was dug pretty large. And we had put it in a couple black trash bags. Anyway, the plan was to, kind of just take it down slowly, and we'd put it down, and then I don't know what I was thinking, how I was going to ever get it up, which I had to deal with later. But when I almost broke my foot, actually, my wife and I, we lost control of it because we're trying to do this in the middle of the night too, literally. And anyway, it tipped over and it fell down, and of all things, the damn thing fell straight down on the keypad. So not only did I have this large safe buried, but I couldn't even open it. So like if there was an emergency or I needed to get out of Dodge, this safe was there. It was going to be there after nuclear holocaust or whatever. It was going to be there forever. But yeah, don't bury big safes. And if you're going to do midnight gardening, make sure you keep track of where you're putting it. As far as the mining shares, just briefly,
The mining shares should be completely separate from gold and silver accumulation, or even the thought of gold and silver. If I think the dollar is going to go up, I don't think about buying the banks. I hold dollars. Or if I think gold and silver is going to go up, priced in dollars, gold and silver really has nothing. It's obviously tied to the mining stocks, but the mining stocks are speculative. They're not great long-term investments. If you look at any of the big mining stocks, they're disasters. They're a horrible store of value for the long term. Newmont, Barrick, none of these things. Gold went to 1900, and they couldn't even break their mid-1990 highs.
That's
junior
why
miners,
they're such great values right now, Daniel. That's why they're a steal right now.
yeah, no, and the junior mining stocks, they're very volatile. But remember, all these stocks are backed by individuals. They're backed by people. They all have different issues with governments. Some governments are harder to permit. Ounces in the ground are not equivalent to ounces in the ground in other places. So they're just very speculative, and I think it's a great place to be right now. Like Andy had stated, I'm big into the mining sector, but when we're talking about gold and silver and protection and currency crisis, that's physical precious metals. The mining stocks, they're going to go up. When your neighbors and stuff think it's cool to talk about gold and Ron Paul at a party, then sell the mining shares immediately.
Two things I'd like to add, and then we'll go on our break. Number one, for those of you who don't have a broker and want the best company to work with, period, call my buddy Eric Angeli at Global Sprott. Tell him I referred you. You'll get the red carpet. It's Angel with an I at the end, pronounced Angeli. He's been at Sprott for a long time. Tell him I referred you. He'll hook you up, and you will get, in that industry, it's who you know more than what you know. Rick Rule knows everyone and knows a lot. And they are who you want to buy mining shares from. And one last thing about the storage. A lot of you people know who Bill Holter is. Bill and I are good buddies. He's written for our newsletter for a long time. I'm a big fan of Bill in many regards, but I bring this up because Bill lives in Bastrop, Texas. And his whole neighborhood burnt down 3 years ago, completely to the ground, every house in his neighborhood. And do you know what the only thing that was left in Bill's house? The only thing that was left in Bill's house was a safe full of $100,000 full of melted silver eagles. So Bill sent me these melted silver eagles, and I would open up the tubes that were pretty much melted, the coins, and I would bang them on the table, and they would pop out. They were green, and you'd smash them, and they'd break apart. But you know what? We melted them down, and he got 99.975% of the value. The refiner took a little bit because they were really nasty. But the point of it is that even fire, they withstood. The entire neighborhood burnt down to the ground. Nothing left in his home. Every earthly possession he had was gone but that silver.
What about the numismatic coins? Were they safe?
I don't know if they were safe or not. But you know what? That's the cool thing about gold and silver, too. You can pull it up from the bottom of the ocean 300 years later and clean it up, and it's brand new. It can withstand a fire. It can withstand a flood. It can withstand all this stuff except a burglary, and that's your only consideration, and that's why you don't tell many people loose lips sink ships. Don't tell people. Hide it. Keep it yourself. If you have to store it, do it.
We're gonna take a 10-minute break, and then I have two more questions here. I'm gonna jump to the front left. I see you guys have some questions, and then I'll bounce around the room. So about 10 minutes.
Righto.
One new gold stock making big headlines since its start last April, acquiring gold for $5 to $10 per ounce in the ground, which is dramatically lower than the $50 to $100 per ounce in the ground other companies have been paying. To learn more about what hard asset investors are calling a mineral bank, visit futuremoneytrends.com/investright.
And I'll let Andy take the ratio part. There are no special tax reporting rules with Silver Eagles that I know of. Let me just put it to you this way. When you sell gold or silver in terms of tax reporting, when you buy it, if you pay with a check or a wire or an ACH, if you pay with anything other than green money, in any amount you buy, $10 million, zero reporting. Zero. By me or by you. $100 million, zero reporting. You pay with more than $10,000 in $20 bills, to go buy a new Ford Explorer, to go to Nordstrom's and buy T-shirts, or to buy gold from me. The minute you spend over $10,000 in green cash, any company is supposed to issue you a Form 8300. That's a form that says you paid with more than 10 grand in cash, and they're really only looking for the guy that his W-2 says he made $4,000 last year, but just gave me 10 grand to buy some new gold. So anyways, when you buy, there's nothing. When you sell, I'll answer the part you didn't ask first, the gold. When you sell gold, there are 4 items that trigger dealer reporting, and only on the 25th ounce. So if you never sold more than 25 ounces of gold, ever, then there would never be dealer reporting. Dealer, let's highlight the word dealer. It's always your responsibility. On the 25th ounce at one time, now, you could sell 24 ounces indefinitely as long as you don't tell me you have 500 ounces and you intend not to report it, so I'm going to do 24 at a time. No, instead you just call and do 24 as often as you'd like. The 4 following items, if you do more than 24, I need your social. Krugerrands, Maple Leafs, Mexican 50 pesos, and gold bars, period. Anything other than that, including gold eagles, 0 dealer reporting. Now on silver, what you're alluding to, silver eagles, you can sell unlimited amounts with no reporting. But the same thing is true with Maple Leafs, Philharmonics, and just about any of the other 1-ounce major coins, pandas. In silver, if you sell more than 1,000 ounces in bar or generic round form, I need your social, and I file a 1099-B. If you sell more than $1,000 face value in junk silver, dimes or quarters, I need your social, file a 1099-B. Anything other than bars, rounds, and junk silver, there are no reporting requirements in any quantity by me. But Uncle says that if you sell anything at a profit, Uncle wants his cut. So the bottom line is Silver Eagles do have a privilege, but that privilege is extended to all the other 1-ounce coins. It's just a function of bars and generic rounds and junk silver that triggers the 1099 or the reporting requirement. So I'll let Andy answer the ratio part.
Well, yes, the gold-silver ratio now is in the 70s. It was in the high 70s and the low 70s. It's probably in the mid-70s now. I'll get to the history of that in a second. And to answer your question, is it the no-brainer investment, the gold-silver ratio, meaning buy silver? Yes. But is it a no-brainer to only buy silver and wait till it gets to a certain ratio? No. Both metals have a part in your portfolio, and there's definite reasons. Even though they are both precious metals, there are definite pros and cons of both that you should know in your own mind. It all comes down to someone who's asking me about what percentage of precious metals should you have. Well, that's up to you, and the same goes for what percentage of your gold versus silver should you have. Mine, 50-50. Why? Because that's what makes me feel comfortable. Yes, I believe more than anyone on the planet that the gold-silver ratio is going to go down. I think it must go down. I think that the historic ratio of 15-to-1, which was going on for hundreds of years based on essentially the amount that comes out of the earth, 15 ounces of silver to 1 ounce to gold, I think that's a no-brainer. In fact, right now, the actual amount that comes out of the earth is 9-to-1 because silver is depleted more and for geologic reasons. And frankly, I think because what I said before about most of the silver coming from copper, lead, and zinc mines, I think that ratio coming out of the earth could go much lower. It could be 5-to-1. Again, that doesn't mean that's what the price will be, but my point is for hundreds and hundreds of years, the gold-silver ratio, whether it was set by governments or not, was that low. It was really only after the futures market started that it got a lot higher, and also the demonetization in a lot of people's minds. They didn't even realize people in the Western world have forgotten that it's money. We were just talking about at the break how so many countries, people don't even understand how many countries in the world, the Chinese word for money is silver. The French word for money is silver, et cetera, et cetera. So again, silver has a lot more monetary history than gold, and I think that once people start to get fearful, I think it is a no-brainer that the gold-silver ratio is going to go down a lot. And right now it's in the 70s. But that said, I would not say, well, that means sell all your gold and buy silver. I think it's a perfect opportunity, and we talk about this all the time, to do a swap and I have done them myself, because you can sell silver, take a tax, sell gold, take a tax loss, and buy silver at cheap prices. And it is a no-brainer, but only into the proportion that makes you feel comfortable. And again, I could not agree more that it's a no-brainer.
And if you do that, it's an invisible transaction, by the way, because the loss in privacy in and of itself in buying gold or silver is writing out a check. So you sell 20 grand worth of gold and you get a receipt saying you sold your gold. Your accountant doesn't ask you, what did you do with the proceeds? With the proceeds, we turn around and sell you back 20 grand worth of silver with no paper trail that you now take possession of. That's completely, bless you, completely and totally invisible. So I think that's a cool thing to do as well. Switching from gold to silver. The bottom line is you own enough silver to make you wealthy. I think that, but becoming wealthy with silver will probably come at the expense of everyone around you as the dollar's crumbling. The bottom line also here is that if your focus is gain, it's in silver. But remember, 100 grand in gold I could have on my person, and none of you back in the back would know it. 100 grand in silver would weigh 450 pounds.
Andy, would you say that the gold is more dollar dependent for its price increase in dollar terms than silver is dollar dependent? Silver more so on the supply and demand side.
100%.
Way outdo gold.
100%. In the past, look, as I was saying earlier, I have felt that big money has been manipulating price. So I didn't just come up with this epiphany, right? In 2008, the price of gold went from 1,000 to 700, and the price of silver went from 21 to 9 in 1 week period in July of 08. So silver fell by 65%. Now, you guys don't have to be economists to know that if you just bought two investments, A and B, and A falls by 35% within a week after you're buying it, and B falls by 60%, that there's probably not a lot of demand for those products. In fact, you would probably surmise that everyone's dumping it. Now, when it comes to gold, and back in 08, I was able to get it at a hefty premium with a little bit of a delivery delay. But as silver fell by 60%, every major mint in the world was out of silver. Every one. Every single mint. The US, Canada, South Africa, Austria, Australia, all the refiners, everyone was out of silver. And when they finally came back online, we were able to purchase Silver Eagles and Maple Leafs at a 100% premium with the 12-week delivery delay, and you had to pay up front. So at $9 silver, you'd pay $18, and you'd wait 12 weeks. It's completely detached from the price. Completely. The demand is 100% detached from the price. And when big money suppresses the paper price, they come in and scoop up all the physicals, and that's what led me to believe, because here I am looking at a market that just fell by 65%, and every single product on the planet was gone. And I went the entire second half of 08 with the inability to sell anything for immediate delivery. The best I could do was at best maybe 10-week delivery delay with 100% premium. So yes, the price has become disconnected from the demand. The price is the no-look pass. The price is the misdirection. The price is what they are doing, enabling them to gobble up the physicals while they subsidize the price because people are focusing on price. And so, yes, I think that the price is especially in silver, has very little to do with the fundamentals or the demand.
I'm going to highlight a little further. Everyone, a lot of people in this room know about the 2008 shortages, but they don't realize just how acute the shortages have been in silver. We have had almost as bad shortages several times since. Last summer was a great one because, there was a bit of a stock decline when the Chinese devalued, but you know what? Not really a big crisis. We ran out of silver for 2 or 3 months. Premiums surged, and that was not a crisis. People also forget about 2013. Remember, Obama had his big closed-door meeting with the too-big-to-fail bank CEOs on April 11, 2013, and that very day, Goldman Sachs put out a short sell gold recommendation, and then sure enough, the very next day, or actually it was 2 days, Friday and Monday, they hit the price of gold by 8% and the price of silver by 10% for absolutely no reason other than they were scared and wanted to hurt the market. And guess what? May 2013 was our biggest month in business. Maybe 2008 would have been if we could have done any business because there was no silver, but that was easily the best month, certainly since I've been there, because we had a massive shortage. And of course, you know when else we had a shortage? In 2011 when the price went up. That's how scarce silver is, and that's why I'm so sure that at least the physical gold-silver ratio is going down, and certainly in time, eventually, the paper one.
Look, last year, July, August, September. Typically, in July, August, September, I go golf because it's like there's nothing to do. No one's buying. It's the slow months. July, August, September, the Royal Canadian Mint and the U.S. Mint experienced successively the three biggest months of demand that they've ever had in both of their existences. And they were both out of product for, there was no, you couldn't get it. The Canadian Mint would not accept orders from us for a good portion of July. And when they finally started allowing us to do it in August, it was, 4-week back order, 3-week back order. This was last year when silver was doing nothing in the middle of the summer. So the price is really not indicative of the demand. The demand can switch like that, where all of a sudden it's just gone. And I think that this is at a time when most of the people, look, you guys are all the pimple on the elephant, right? The elephant's out there. The pimple on the elephant's in here listening to this nonsense, right? People out there would say, well, you buy gold and silver, really? Right? So what happens when the elephant comes into the room and says, I need gold and silver now, the big money, right? What happens when the big money says, screw my stock portfolio, I need $5 million in silver? I mean, overnight, they will all be gone. If you listen, and I'm not just saying this to try to get you to buy from me. If you Google my name and look at every speech, interview, or podcast I have given at the Sprott Convention, at the Casey Show, at Stansberry, at any of them, standing up in front of 1,000 people who pay $1,000 to get there, a lot smarter than I am, and I say the exact same thing every time. I'm the little boy who cried wolf. This market will define itself by an inability of all of you to get product. That's what will happen. The prices will go high, and the people on the outside will say, well, shit, the price is so high, I'm not going to buy it. The rest of you who are trying to buy it will find it's gone because the supply is that thin. It has been disrupted so many times when it shouldn't be, when the price is falling and no one wants it, and all of a sudden you can't get it. Well, what the heck? That's not how businesses run. When you have so much demand, people are knocking down your doors, you hire 12 new people, and you build a new facility. You don't go back order 12 weeks and say, we're not going to take your business. This market will identify itself by an inability to source product. I would bet my life on it. If anything puts me out of business, it'll be my inability to get product. And when all of you buy product, what do you do with it? If I call you up and say, hey, those gold coins you bought last year are up $150, you want to sell? You're going to say, no, but thanks. Because it only validates the fear that you had to motivate you to buy it to begin with. It validates your concern. It's the only market in the world where as the price goes up, the fear that you were motivated by is validated. So you're not selling going back into dollars, nor is anybody else. And so the supply from the secondary market is gone. And so when the 5 major mints, US, Australia, Austria, South Africa, and Canada run out of product, forget about China and forget about Great Britain. Their mints amount to nothing. When those 5 mints run out of business, it's game over, period. That's it.
I'm going to add 2 things to that. Back in 2008, when we ran out of supply, the demand for silver, just for the U.S. Mint, was 1/3 of what it is today. And we're still having shortages. They can't add enough capacity. That's how much demand there is. And, last year we had this big shortage, which caused us to, actually, no one to be able to buy anything for a month or 2. Guess what? Demand is now higher this year by a lot than it was last year. And that's with rationing. The Constitution says they can't, but they have been rationing. Look at the Mint website. They're at 1 million ounces a week. Why? Because they can't get enough. And it's way above last year. And we're heading into a crisis right now. So again, silver is definitely going to go into shortage again. And to add one more thing, we're talking about when do the elephants come in the room. I have been talking for the past year about when, in fact, it was David Morgan, a good friend of ours, who actually kind of put it back into my head, something I'd forgotten about for a few years. Institutional demand was gone. That's why you had record demand in the world for gold and silver, but the prices weren't going. Yes, the retail business was high at the mint, and central banks do what they do with their swaps behind the scene. The Chinese are grabbing, buying product, but the institutions, which were the ones who were buying everything, they're buying mining stocks, they're buying ETFs, everything back in 2011, they've been gone, and they are back. Google my article back from February. It says institutional gold and silver demand, the final piece of the puzzle. That's what I'm talking about. There's a reason why you have record demand to ETFs now. There's a reason why after 4 years, actually for small mining stocks, after I think it's 7 or 8 years, they are all going up now. There's a reason why PSLV, the Sprott Silver Fund, was actually able to do a deal, and why their gold fund is going to be able to do one soon. And even the Central Fund of Canada, which just a year ago was trading at a 12 or 15% discount, is down to a 3% discount. The elephants are coming back into the room, and you talk about a perfect storm of supply, demand, and of course inventories, and the explosive money printing, negative interest rates, etc. And you realize, I cannot believe that we will be able to get through another 12 months without a really debilitating silver shortage.
Next question is for Mr. Hoffman.
Sorry, you're next.
Hey, Andy.
Yes.
Yeah, I had a couple of questions. One is I'm concerned about the banking, obviously, with what the situation is. And I had relatives and people that I loved that got hurt in 2008, kind of in a big way. And I guess my question is that, like, I'm a finance guy over my church, and a lot of the endowment money that we have is in CDs and things of that nature. Do you feel that people that have CDs in banks are going to get hurt? That's my first question. And would you put that money into precious metals? I'm sure that's probably what you would think. My second question is, Jim Richards was talking about that, a lot of people in the industry talking about gold's going to go to $10,000 an ounce or whatever it ends up going to, whatever. But what concerns me is when they talk about that, when they talk about silver, they always say things like, well, silver will probably go to $100. Gold goes to $10,000, silver goes to $100,000. When I read stuff from John Williams, he says it potentially right now it should be at $660 an ounce for an ounce of silver. What is real?
Okay, a lot of questions here. First of all, you talk about endowment funds. That's what I'm talking about. Institutions. The University of Michigan just announced their endowment fund is going to buy gold mines. They're looking for something. They're looking for something that will earn them that's not a negative yield or a low yield. There's a reason why insurance rates are going up, aside from Obamacare, not just health insurance. It's because insurance companies can't get yield anymore because the governments have taken the rates down so low. Institutions are looking for investments that are different from the things that have hurt them in the past or that issue no yield. And they are going to come into gold because, hey, if I'm not going to get any yield, I might as well get something that I'm not going to lose my shirt on, like a bond. So that's number one. You asked about, are the banks in trouble? You're damn right they're in trouble. I don't keep money in banks. I've said it many times before. We were just talking about it. The cash that I keep, and I have most of my cash in the form of physical precious metals, stored somewhere where I don't tell it. A lot of it's at Brinks. But aside from that, I keep it at Charles Schwab and a little bit at Fidelity in non-marginable, if you remember what happened to MF Global back a few years ago, brokerage accounts. Because again, it comes down to the priceless precious metals, worthless dollars. You're talking about a really ugly scenario if Charles Schwab, which is debt-free with $7 billion of cash, would have their assets frozen. It would mean the world is falling apart. Charles Schwab's not going bankrupt. There is no way, I'm saying it to the world in this podcast, there is no way Charles Schwab will ever go bankrupt. But the government could do all kinds of crazy things. They could say, we're nationalizing every financial institution and we're bailing in Charles Schwab even though it doesn't need the money. So I'm not saying it's risk-free, but I'm saying the banking system, I don't keep anything. Actually, I keep $1,000 in key banks. It's by my house because I need basic services, and if I need a checkbook or if I need a money order to buy because if you buy a gun, you need to have a money order to get the permit, that kind of stuff. That's it. Keep your money out of the banks if you can. You asked several questions. I don't even remember what the third one was.
The other one was about warehouses.
Yeah, well, Jim Rickards.
What you're saying about the value of
Oh, yeah. It's all speculation what the price is going to be. First of all, if gold is $10,000 an ounce, I assure you silver will be more than 1,000. In fact, if gold's $10,000 an ounce, again, it's the what-if scenario. You're talking about, there's only one way gold goes to $10,000 an ounce, which is, of course, where it should be right now, and that's because the powers that be have lost control. If they lose control and gold goes to 10,000, it's going to go to 20,000, it's going to go to 200,000, and silver will go along with it. That's the whole point. That's the fear. When it goes up, everyone piles in. That's why they're doing what they're doing now. They're a record short position in the COMEX, even though the price is way down, where they're so scared of the fear factor coming in, the shortages Andy is talking about, because they will happen. But I wouldn't get too worried about what people predict. They don't know.
You know, I think it's hard to pick a number, but just know this. Look at the big picture. Throughout all of history, there's nearly a 90% correlation in movement between the two. As one goes, so does the other. It's not always at the same time. Sometimes there's a little lag. But gold won't go to the moon without silver following it to a large degree. And anyone who just picks a number, like 10,000 or like 100, I'm making an educated guess. In the case of Jim Rickards, a very educated guess. I would never poo-poo anything a guy that is as connected as he is, who's been invited by the CIA into scenarios of war games that are related to financial war. He's tied in, and if he says it, you know, hey, maybe it's true. But bottom line is, instead of picking numbers, just know that as they go together throughout all of history, they're not going to go independent of one another.
The issue is not what happens to gold and silver. Again, as Daniel started the show, it's what happens to the dollar. That's why it's so silly to talk about a price. And anytime I hear those two numbers, $5,000 and $10,000, I mean, you talk about a shot in the dark. There's absolutely no reason to pick those numbers other than they are exciting numbers. And in this particular person's case, he is selling a lot of products. It gets people very excited. There's all kinds of people that use those numbers. But there's absolutely no reason to believe 5,000, 10,000, 100,000, any of those numbers matter at all. And again, if you get to $10,000 gold, we're talking about a very vastly different and more scary world. It will never, ever happen in a normal, organized way where markets are functioning and everything is fine.
The reason he chose those lofty numbers was he was talking about gold backing a U.S. dollar, a new U.S. dollar backed by gold. And in order to be able to give them the wiggle room they would need to maneuver, they would need it to be at some crazy number like 10,000 an ounce, or they don't have any ability to maneuver.
I think he used like M1, 40% backing for the U.S. at 10,000, and then if you took China, the Eurozone in the U.S., it was like 50,000.
Yeah, but what's the M1? I mean, we don't even know what these numbers are. They stopped printing M3 the month that Bernanke took office because he said it's too expensive to administer it, $1.5 million. Again, all these numbers, they're just numbers. They're based on absolutely nothing. I mean, I can give you a number. I did the same math that Jim Sinclair uses. He said, well, back in 1980, this was how much gold was in Fort Knox. This is how much dollars were thing. And I came up to a number of $900 an ounce. And sure enough, it was $900 an ounce. If I do that same number today, and I've written about this many times, it's $15,000 to $20,000 an ounce. The only problem is there's no gold left in Fort Knox, and the amount of dollars outstanding is far more than they tell you. So again, there's no math that can tell you where gold and silver are going. The big question is, how far down will the dollar and the other currencies go?
Next question is for Mr. Schectman.
I don't know if I understand this or not, but I'm sure you can help me. So the bullion banks go naked short on the COMEX and say gold futures. They have no position limits. They can write as many contracts as they want, and it's risk-free to them because they're backed by the Fed, who can print an unlimited amount of money. How does that game ever end?
Because they, at the same time that they're naked shorting in the paper contracts like JP Morgan, they're accumulating the physicals in their house account. So they short the paper price, they fill up their house account with all the physicals, or I mean, let's say, for example, it's not JP Morgan, even though we know it is. Let's say it's the Chinese. And they short every commodity on the planet. I just read last year in Wall Street Journal that China accumulates 4 to 5 times the copper they need for annual production. If you look at the price of copper, it's been killed. It's been cut in half and half again. So let's short all of the things that we want to get, because by shorting it, we create a story. And the story is that the commodities suck. and you shouldn't be buying them, right? Because the prices are violating moving averages and resistance levels, and technical look horrible. So why buy a commodity that's falling and all the technicals look bad? Because you were able to paper short that with a huge amount of leverage. The leverage on the COMEX is 33 times what you can do in your own portfolio if you call your broker and say, I want to open a margin account. You can do double the value. You got 100 grand in your account, SEC law says you can now buy 100 grand on margin. And the minute you get under 50%, you get a margin call. But if I want to buy a 100-ounce gold contract or sell short a 100-ounce gold contract, $3,500, I control 135,000. So what if I'm worth a lot of money? And I start shorting. And I, by the way, I'm one of these commercial banks, and I happen to sell the options to all the people like you and you and you and you who are betting. And I know where those option levels are. I know where those pivot points are, and I just push it just below that, and all of a sudden you got to cover, and then you got to cover, and you got to cover, and you got to cover, and then just pew. And now the price is falling, and everyone says gold's going to hell. Don't buy gold. And now you come in quietly and scoop up the physicals and put them into your house account, and now you have 600 million ounces of physical silver in your house account that you paid pennies for without anyone vying for that same silver. And now you use more paper that you created out of nowhere to cover your shorts, or you sell treasuries to cover your shorts. What it does is it gives you the ability as the big money to create a perception of reality that allows you to steal all of the commodities that the world would deem necessary to be successful going forward, to build your war chest. Because if you just go in and buy it, what's going to happen? The dollar's going to tank, interest rates will spike, metals will go to the moon. All of the things that you want, now everyone knows it. Because we live in a world where information travels at the speed of sound, the speed of sight, the speed of light, whatever. So now you short all these commodities, you create your own perception of reality, you gobble up everything you want at pennies on the dollar, you sell more paper to cover your shorts, and when it's all said and done, you're out of treasuries, you're out of dollars, and you own all of the world's assets at pennies on the dollar with no competition. So that's the only thing that I can think of that makes sense for why they do it. They're trying to accumulate the real thing. And they're trying to blur the value with paper.
But to add to it, you asked, why can't it go on forever? It's not just about what they are doing, it's what they're causing. I mean, what was the whole last 15 minutes about? Shortages. When the price of silver went from 21 to 9 during the fall of 2008, it wasn't because, well, it certainly wasn't because people were selling physical silver. Ask Andy. I guarantee you not a single. In fact, no one ever sells any silver, let alone during a time of crisis. It was because they didn't want it to be a safe haven. So they were buying treasuries, the PPT, the ESF, the Fed, to make it look like that's where you should go. They were naked shorting silver and gold, which was killing mining shares. It was killing ETFs. It was creating a story about how bad gold was. The problem was there was no gold. And in the case of silver, actually, the price never went down at all. If you own silver, it didn't go down 1 penny during that crisis unless you own paper silver. So what happens is every time they do this, the inventories get sucked out. That's why I'm talking about record low inventories, because they've had to supply all those buyers, such in 2008, that wanted silver at these ridiculously low levels. Every time they hit the price, we get higher demand. That's what happened, again, 2013, record month right after that happened. We're having shortages like last year. Just why? Because the price is too low. And we're going to have another one now. Look at what's going on now. You have a record high naked short position in both gold and silver. But it's not like gold is $2,000 an ounce. Gold's $1,200. Silver is $17 an ounce, and they're doing this. So what do you think is going to happen? There's going to be more demand. I texted Andy yesterday when all that was going on. Busy? Yes, very. Why? Because people see the price go down and they want to buy the physical. That's why it can't go on forever. And that's why I've been writing the last week or two about how screwed the commercials are, because they put themselves in this position where the whole world sees that they are record short for absolutely no reason other than, obviously, to keep the price down. And they are going to get blown out of the water at some point, like they were in 2011. And this time around, they won't be able to say, yeah, we killed bin Laden, so the price should be lower. That card has been played, and the whole world is onto it.
You know, the people that pull the strings are not nice people, and they're not honest like you would be to your friends or to someone you meet on the street. You're not going to lie to them right to their face. But in a game that has really the highest of stakes, I think their attitude is, I don't give a crap. We're going to take care of number one first and foremost. We're going to position ourselves, even if it means lying to our shareholders, even if it means lying to the public. We're going to tell everyone commodities are bad, and as we're doing that, we're going to gobble up everything we possibly can and fill up our war chest. And then we'll slowly start saying, well, we're going to dip our toe into the water. See, we told you about it. We did tell you about it, slowly, because J.P. Morgan, I don't know if any of you noticed, just came out and said gold is now entering a bull market and it's going to go to 1,400 this year. Well, they said it. It wasn't picked up by USA Today, wasn't picked up by your local newspaper, but it was picked up by a few other websites that we read, and they publicly said it's in a bull market. You wouldn't know it by their short position. But the bottom line is that you can't look at the price and you can't look at what's happening unless you take a broader look at the supply and the demand. And the demand is off the charts and the supply is hard to come by. And this is all happening at a period of time when no one in this country has any idea about gold and silver, but a very small percentage like you. When it becomes obvious that it's time to own gold and silver, it's way too late. This is what I mean by saying when we're in a sea of uncharted waters, there's not a financial advisor on the planet who can tell you what to do, because none of us know. This is a different place than we've ever been. That's why we're all blessed with good intuition, all of us. And very few of us listen to our inner voice. And that's why, as I said earlier, we all go through life, whether it be about relationships or choices we've made. Damn it, I should have done that. I knew it. I saw it. It was clear. I should have been with her. I should have taken that job. I should have done this. Well, shoulda, coulda, woulda. Trust yourself. I have made decisions my entire life trusting myself and my intuition. I sold my house, as I was telling this gentleman here, in 2007 after I had just built it. It was the biggest fight I ever got into ever with my wife. I literally was this close to being divorced. I said, we are moving. She's 8.5 months pregnant. I said, we are moving. I called my buddy. I said, put a sign in my house now, a yard, now. Because they were building houses down the street for half the price or a fraction of the price that I just built my house for a year earlier in the same school district. I said, we're leaving. I got ridiculed at parties. I got ridiculed by my friends because I put all my $240,000 of equity into silver at $8 an ounce. All of it. And we rented. I said, my wife, Jana, we're going to rent for 1 year. Trust me. Okay? I see this clearly, right? Well, 1 year turned into 6. I screwed that up, right? She was a little unhappy with me moving in the middle of January in Minnesota at almost 9 months pregnant. I was not her favorite person, I promise you. Luckily, someone bought our house. A couple from Colorado who didn't know the neighborhood came in and said, you need to be out in 1 week. I said, God bless you, thank you. And we went and we rented for 6 years, and I turned $240,000 into $1.25 million by selling my silver that I bought at $8 at $32.50 an ounce. And I bought my dream house, and I followed my gut. In 2009, before I even knew Andy, we both did the exact same thing without knowing each other. I woke up and I heard Congress debating taking IRAs. I said, are you kidding me? This made it to the House floor. These creeps are talking about taking the money I've worked my whole career for. And they want to take my money and make me put it into an IRA backed by treasuries? I said, are you out of your mind? I sold my IRA that day. I paid $250,000 in taxes and $70,000 in penalty because I was under 59 and a half. $700,000 IRA. Do you think that was a popular decision? Do you think that a financial advisor would have given me that advice? No. And I am very adamant about taking accountability. If you're right, like I was in selling the house and investing, I was wrong on the time, who cares? Everything I've ever said, my firm, in 27 years, we've never been close to the timing. We're always way early, who cares though? I'd rather be 2 years early than 2 seconds late. But everything I've ever done, I've taken accountability for it. And when you're right, it's way sweeter. When you're wrong, you got no one to be pissed at but yourself. Because it's a whole lot worse being pissed at that guy who told you to do something when it's a lot easier to tell you to do something when it ain't your money. When it's his money, I can tell him to do that. I'm going home to be with my family. I don't care when I leave the office. The bottom line is simply this. Trust your gut. It's the best financial advisor you will ever have. And don't be afraid to step out on a limb if it feels right. Because we're in a place and a time that a lot of which doesn't make sense. And I think that unconventional times call for unconventional decisions.
Unless anyone thinks that these powers that be know what they're doing, you know, the no-look pass, you know, this is not LeBron James out there, okay? These are Keystone cops. The way they derive their power is from the printing press. That's it. The fact that they have the ability to print this money and to manipulate markets gives them power. It doesn't mean that they're any smarter or more competent. They just have this weapon that they can use, and they can use it covertly. That's the beauty of it. Like a perfect example is, you know, I wrote my 42-minute audio blog that I just put out the other day, yesterday. It was called "The Pathetically Desperate Fed Minutes Attack Will Miserably Fail." And the reason I did it was because it was so obvious what they're doing. They came out suddenly in the middle of the week. I mean, there's no chance they're going to raise rates, and why would they? They'd be crazy. I can go over the litany of reasons why there's a 0% chance in the money markets. They're not going to raise rates. But to me, they said, we got to get gold and silver down. We got the record short position that's going to blow up in our face. And B, people aren't listening to us anymore, and we got to make them listen. So let's just kind of pretend that we are considering raising rates. And the thing is, if you listen to what all these guys said, none of them said that. There's not. And if you go over that audio blog, I list everything that they said and wrote. As usual, there's not a single thing they said about raising interest rates. They said, if things go the right way, we will consider doing it, which is what they always say. I mean, that's what their job is, right? If things go and make it so that you raise rates, you raise rates. Of course, they never do, so they never do. And the only time they ever raised rates was because they pinned themselves in a corner saying that they were going to do it for 3 years, and when they finally did it, they almost blew up the world. That was last December. So here we are this week, out of the blue on Wednesday, with gold and silver getting ready to break out. All of a sudden, you hear CNBC saying, oh, the Fed is talking about they may raise rates, they may raise rates. And so the Fed, the minutes come out, and again, I've talked ad nauseum about the minutes. The minutes happened a month ago. They're doctored to start with. They have no impact on what is happening today. And anything that they did say a month ago went into that policy statement, as well as the 10,000 speeches and press conferences that those guys have given in the last 3 or 4 weeks. And by the way, I listed all the things that have happened since the April 27th meeting, and they've all been bad. Not things that you raise rates for. So they do this thing, the Fed comes out and puts their minutes out, it says absolutely nothing, listen to my audio blog, and they hit gold and silver. And by the way, gold is $18 lower than when it was, and big deal. So silver's 50 cents lower. No big deal, really. They still got their record short position, but they've now put themselves on the hook, all saying that, yeah, we're thinking about raising rates, which in the words of their propaganda says, yeah, they're going to raise rates. Well, what happens when they don't raise rates in June? There's still, by the way, in the markets, an 80-something% chance that they don't raise rates. No one believes them. But they put themselves in this position where they've made it seem like that maybe they'll raise rates. So what do you think is going to happen to gold and silver when they don't raise rates? I mean, yeah, they'll think of some reason. Oh, it's the Brexit. It's, we didn't know the Chinese market was going to fall further or that something gone. But the point is they won't raise rates. And they're going to be still stuck with this record short position and people calling their bluffs. The point is, these guys are Keystone cops. It's like the movie Fargo. They just keep digging deeper and deeper and deeper. The first guy, I need some money, I'll arrange a ransom, and by the end of the movie, they're all dead. That's the position that these guys are in right now. They're going to blow it some way, shape, or form because all the factors are going against them. Maybe it's in June.
Maybe that's why J.P. Morgan is amassing the largest physical position of silver ever seen in the world.
And saying we are in a, quote, new and long-lasting gold market.
As they've shorted the price for the last 3 years to enable them to get said position without everyone crowding them out in their endeavor. So it's a classic misdirection. And the mistake that people make is believing that the world is transparent. Well, the world of high finance is anything but transparent. It's screw thy neighbor is the world of high finance, and that's what they're doing. They're misdirecting with price to enable them to acquire everything they need to move forward. And that's why they do it. That's exactly why they do it. And they have the ability, not only the immunity from the government, and the government regulators, but also the ability to paper over all of those short positions that give them this huge stockpile to move forward in whatever direction the world takes us.
The next question is for Mr. Hoffman, and then, of course, as everybody this evening has the chance when they go home to listen to his 42-minute audio blog at milesfranklin.com.
Hey guys, so a couple weeks ago, Porter Stansberry sent out something to his advisors or his subscribers that I thought you would think might be interesting. I want to get your thoughts on it. So he said that he had dinner with some guy who's high up in the banking industry, you know what I'm talking about?
Yep.
And used to be in government, and he told him that we were looking at the banks doing some credit default swap with gold and U.S. Treasuries, and I guess you know the story.
Yep. What you're talking about, well, I believe what he said as he came away from that, and then he used the number of 10,000 an ounce. We were talking about this earlier at the break. He's talking about, did you read that article, by the way?
Actually, I did not.
Okay, so I did. He read the article he was talking about. He went to dinner with some people in the know, which he couldn't say who they were. Very, very influential people who basically said that gold was going to go to the moon because they were... what I took away from it was that he was implying that gold was going to back some sort of a new world reserve currency that the U.S. government implements, and in order to make it palatable, they would have to raise gold to a level of $10,000. Let me say this about Porter.
So another question is like what
I'm at all of his conferences for a reason, because he's as tied in as anyone I've ever met. He's the best marketer I've ever met in my life. So sometimes when I hear what he says, I think, well, that's just Porter marketing. But on the other hand, when I read that, he really went out of his way to make it seem like, hey, this is real deal. And he didn't... Most of what Porter says, which really pisses me off, is that you have to listen to some long spiel and then pay for the answer, right? I can't stand that. That time he didn't do that. He came out and said, hey, this is what that was said at the dinner. They said gold's going to 10,000 an ounce because it's going to be part of a new world reserve currency or implemented by the United States. Of all the things that I've ever read from Porter, that impacted me more than most, because it's one of the few things he ever came out and told you the whole story without having to pay to hear the end. And if any of you are on his mailing list, you know what I'm talking about. Every single time he sends something out, it's you listen to a long thing and then pay $149 to get the reports that give you the answer. Well, this time he didn't. And I think a man with his reputation, like him, where really when you're in his business, reputation is everything, you're not going to come out and say stuff like that that's sensational for no reason. So, I mean, I don't know what to make of it other than to say I got a lot of people asking me about it, and I think he believes it, and I kind of do too, in the respect that ultimately as I was saying to some other people at the break, the only way that you will ever be able to get a new currency that is accepted by the masses is to back it by something that can't be screwed with. Because we've shown that over time, politicians will find a way to manipulate the currency to their own benefit. And if you want to issue a new world reserve currency that is accepted and embraced, it'll have to have something after the gross mismanagement. Do you know when the Federal Reserve came into play in 1913, their job was to be the steward of the value of the dollar. It's lost 98% of its value or thereabouts since 1913. So, the bottom line is that we've proven a poor steward of the world reserve currency. So if you're ever going to have a new currency that's accepted, it'll have to be backed. And he gave some math as to why it would be 10,000, and I'm not exactly remembering how he got to that number, but that was the number that all these people are using, and it has to do with the amount of gold at Fort Knox, our national debt, and the ability to have it as a world reserve currency. So, I give it more credibility than I do if it was from somebody else, because, again, with Porter, just like Daniel, and just like us, I mean, if we're up here saying a bunch of crap, no one's going to listen to us or pay for our newsletter if you're Porter, or listen to what Daniel's saying, or listen to what we're saying. So I think he believes it, and he's a pretty credible dude. He's made a fortune, and he's a very shrewd businessman. So I don't think that he would say it if he didn't believe it.
That said, I have several comments myself on this. One being, again, anytime you hear that number 10,000, you got to think about it. It's a very, very powerful marketing tool, and it's often used out of context. The other thing is, anytime you're talking about insiders or people who are unnamed, why would I believe that there are insiders or people unnamed who are going to be telling people like Porter Stansberry things? Third of all, the U.S. government doesn't have any gold left. Why would they want a reserve currency? It makes no sense at all. We have sold. It's mathematically proven that the only way we could have gotten this far was by selling, leasing, or swapping all the gold in Fort Knox. That's why it hasn't been audited in 70 years. There is no one on the planet that will lose out more than by any kind of significance to reemergence of gold in the United States. Our power is derived from the fact that people still own the dollar, countries still own the dollar, and they still transact in it. If they stop doing that, we're just a country of 300 million people with 19 trillion of debt, 200 trillion of unfunded liabilities, and no manufacturing base, and the highest standard of living way above where it should be. So
you put it that way, that sounds pretty sucky.
Yeah. So again, and Rickards is another. He's always saying, "Oh, I know these people." Who does he know? He's out of the way that I see it is he was once in the system, and he said all these kind of things. Now he's out of the system, so he talks like a normal person. And again, the biggest myth, when you were about to ask your question, I was going to say the biggest myth that's out there, especially when you talk about the powers that be, is that they're all together in on this. You couldn't, I mean, look at the actions of the countries in the world. The trade wars, the currency wars. I mean, we're talking about if Trump's president, the Mexicans won't let him in the country, the UK won't let him in the country. Marine Le Pen, who's going to be the president of France next year, says Hillary Clinton's going to start World War III. There's no, and let alone the Chinese, I'll bet you there's only a handful of American diplomats who even speak Chinese, let alone to try to negotiate with them, when they have all the cards, by the way. They have the gold, and they have our debts that we owe them. So again, there's no conspiracy out there that there's going to be collusion. There definitely, no one in power wants a gold standard. And we don't own gold, meaning we in this room, because we think there's going to be a gold standard. We own it because it's been depressed to keep this fiat standard, which is destroying the world, going. One day there may be a gold standard, but again, we're saying, Andy was saying, the only way there'd be a currency that's accepted is if it was by something that's not going to be screwed with. They could screw with gold. The U.S. says they have 8,133 tons of gold when they probably have none. They could say whatever they want. They can manipulate. There's going to be a long, long way between today and between any kind of world in the future where people trust in the currency.
This is what I mean. You get my opinion, you get his opinion. In the end, neither of us know squat. It's your gut. What does your gut tell you? If you didn't give credibility to what Porter was saying to begin with, you wouldn't even listen to it. The point is that you believe in your gut that the dollar's in trouble and gold go to the moon. That's what you take away from it. Regardless of what he says or what I say or what Porter's source says, truth of the matter is we're in big trouble. And the likelihood of gold going way up, it's possible. More possible than it is of not going way up. So, in that environment, you do all you can. You buy it, you accumulate it, you look at these low prices as a subsidy and a gift to accumulate it. And if the worst thing that happens is gold never takes off, well, you give this gold to your children or your grandchildren someday. And I can promise you this, in the year 3000, when your great-great-great-grandchildren still have those coins that were passed on through your family, and the dollar bills that we call money are hanging in a frame in the Smithsonian as what once used to be, I promise you that gold will still be worth something, as it has since the beginning of recorded time.
And don't forget for a second, back to the secular American argument, that, I mean, how many times do I write this and say this? On average, the average currency around the world used by 6+ billion people, gold price in those currencies is either at, near, or way above all-time highs. If I had to do the math of all the 180 currencies, I'd say probably on average 10% below the all-time high, including in both Mexico and Canada and Australia, and heck, even in Europe. The euro, it's only about 23% from its all-time high. India, 13%, Japan 8%, and then of course all the BRICS that are way above their all-time highs. So again, you say, well, when's gold going to go up? For almost the entire world, it's gone up huge. And the problem is that in those countries, you can't buy gold. You don't have the supply chain like you do right here. There's no Miles Franklins around in most of the world. And a lot of places they do. They have huge VAT taxes and all kinds of things that make it almost impossible to get. Here, the place you need it the most and the currency has the most to lose, it's been subsidized to the point where, you asked about fundamentals. Well, the miners have been going out of business because it's way below their cost of production. And their reserves have been going down, and their production is going to be going down. The price is too low for any circumstance.
Do you understand what he's saying? What he's saying in layman's terms, because he thinks at a level that most of us don't think at. What he's basically saying is that the dollar is irrationally strong right now, and it's at record levels in every other currency across the globe. What happens when the dollar starts to lose value? It'll be at all-time records in every other currency across the globe until it surpasses it in dollars. If you would have done nothing other, a year and a half ago, not last summer, but the summer before, so almost 2 years ago, it was $1 buying $1 in Canada. When I get off the plane in Montreal to do our audit, $1 would buy $1. So if you did nothing other than in a civilized place like Canada, put $1 million in Canadian dollars into gold and done nothing else, 2 years ago, it would be worth $1.4 million today, and the price of gold has hardly done anything since then. It's up a tiny bit. It's because the dollar is so stupidly strong right now that gold doesn't look like it's doing anything, and the dollar has been manipulated up. Every other currency across the globe is at all-time record high prices, in gold or 10% below.
Gentlemen, our next question is about gold and IRAs, as well as an emergency plan for the Brink storage.
Hi, can you please give some information on Gold IRA, and does Miles Franklin handle this kind of account?
Okay, so, I stood up here a few minutes ago and told you how I sold my IRA. I was 39 years old at the time I did that in 2009, and I did that because I looked at where I was in life, and I thought to myself, well, gee, I have to be 59 and a half before I can legally take money out with any penalty. The likelihood of shenanigans happening in the IRA system after I just heard about them, the Congress debating taking IRAs and making you mandatory invest in a treasury program, I figured that or the taxes going way higher, I'm out. Okay, but if I'm closer to the distribution age or already in the distribution age, it's a whole different ball of wax. The IRA program with gold is really cool if you are nearing the retirement age. 59 and a half is the age where you are allowed to take money out of your IRA without paying a penalty, right? One of the big fallacies we all live under is that the money in our IRA belongs to us. Right off the top, you can cut 25 to 30% off of the value of your IRA. That goes to uncle. So when you got $1 million, you really don't have $1 million, right? So I figured, well, I got 20 years before I can take money out. There's no way it's all going to be there. I'm out. But if I'm 58, 59, 60, 65, the IRA offers intriguing advantages. And what that is that with the precious metals IRA, you can literally buy the physical metal. The only thing is that in most cases, we don't need to get into how you can avoid this because it's convoluted, but in most cases, it's held by a custodian. And the custodian that I happen to work with intimately in North Dakota is one of the approved custodians by the government. And so you buy, let's say you have an IRA and it's worth X amount of dollars, and you buy gold and silver and you have it held by a custodian. Here's where it gets cool. With every other IRA, let's say you're investing in energy stocks or in IBM or Apple or whatever, when it comes time for distribution, at 70 and a half, you must take distribution. The IRS says you have to take a distribution start taking distributions at 70 and a half, or you get penalized a huge penalty. So let's just say you have it filled with Dow stocks, just a bunch of stocks, and you start taking distributions. Well, how do you do that? You sell a portion of your stocks, you get money into your account, and they send you a check. You took a distribution, right? It's kind of like a pie. You got a giant pie, an apple pie, and you're 70 years old now, and they say, well, you know, you need to start cutting that pie and taking pieces. You could take the whole thing, or you could take little slices each year. So with the precious metals IRA, you fill it up with gold and silver, and now when it comes time to distribution, whether it be a voluntary distribution at any time, even if you're under 59 and a half, you can take a distribution. You'll pay a penalty along with your taxes. Or a mandatory distribution when you're 70 and a half. You can actually pull the metals out and take an in-kind distribution. It's one of the only investments I know of in an IRA where you can actually take the metal or the investment that you invested in, take it back. There are very few investments that allow you to do that. So you fill it up with 1 ounce gold coins and 1 ounce silver coins or fractionals, whatever you want. And then as you start taking distributions, you pull the metal out as an in-kind distribution. And it really allows you to make a very large splash in the gold pool without writing out a big check, is my way of thinking about it. So bottom line is that the IRAs are cool for some people. If you're at the right time in the continuum, then yeah, fill it up with gold and silver, take possession of it through distribution channels. You could say, I don't want the gold and silver, maybe things change, I need the money. So then we'd buy it back, send the money to the custodian, like Entrust or New Direction or any of these IRA custodians that allow gold ownership, and then they'd send you a check.
She has a follow-up question as well.
What's your follow-up question?
Yes, please. Like you said about the custodian, if the custodian keeps your money offshore somewhere, say in Canada, now what if some political chaos or some, say, EMP happens? Yeah. So how do you access your precious metal?
Well, that's why I like Canada. So, as I mentioned, our business was founded on Swiss investments. I am a charter member of Global Gold, which means that's a Swiss company. I can sell you gold in Zurich, I can sell you gold in Hong Kong, I can sell you gold in Singapore. All three of those I don't want if the you-know-what hits the fan, because it's 3, 4, 5, 6,000 miles away. Canada is a different story. Our program with Brinks, we would deliver by per-late or courier to any physical address, private or industrial, commercial or private, in anywhere in Canada within 24 hours. You could get your stuff. So, you know, the bottom line is that, yeah, what if things get really, really bad, are you going to be prohibited from getting your stuff? Well, I can assure you this. I live in Minnesota. I could be in Canada in 6 hours if I have to. I can get in my car and go north, and I'll be in Canada. You can't say the same thing about Hong Kong, Singapore, Zurich, or anywhere else unless you have a submarine. And so I think that the bottom line is that there are no perfect choices when it comes to storage. But at least in Canada, if you sense things are going to get really bad, you have a fighting chance of getting it than in Europe where things are rapidly going cuckoo, or in Asia with the South China Sea conflict, and who knows what the future may bring. And while Singapore and Hong Kong and Zurich are popular venues, and I can do it, I have the ability to do it myself. I don't have 1 ounce in any of those 3 places. All of my gold is held in either Vancouver, Montreal, or North Dakota, and a very small bit at my house. Now, if I were you, I'd hold as much at your house as you possibly can, and if I was thinking about going offshore, I'd go to Montreal or Vancouver long before I would go across the Atlantic, because at least you have a chance of getting it if things ever got that bad.
Our next question I thought would have been brought up much earlier on. It's about the Shanghai Exchange.
Hi guys, thank y'all again so much for coming. This has been wonderful, except now I have a lot more questions than I did. My first question, Jim Sinclair has just mentioned on the bottom right-hand corner of the national debt clock, something's been added, and that's gold. And the gold ratio is 7,300 per ounce. What does that mean?
They really added gold to the national debt clock? That's very interesting.
He just mentioned this yesterday.
I don't know. Well, again, the people who administer that national debt clock website is not the government. That's private
Sure.
people. But they should know better because that gold isn't there. They're probably referring to the, that mythical gold that's supposed to be at Fort Knox and West
Close
Point,
to
which is not.
10,000 an ounce.
Yes, so I would ignore it.
Okay. Now, my big question, this is my big question. I assumed with the Shanghai exchange last month, we were finally going to have gold start becoming more what it should be. And then I started thinking about the fact that China is really tied to the central banks. We don't like to think about that, but they are. And then I started thinking about the Exchange Stabilization Fund in the basement of the Treasury and their printing press. And is that all correlated?
Well, again, when you say the Shanghai Exchange, you actually mean the Shanghai price fix. The Shanghai Exchange has been around, and what that simply means is, we were talking earlier about the appropriately named London fix. Well, now there's one in Shanghai too, and the reason being simply more. To me, public relations than anything, the Chinese is saying, look, we're the biggest producers in the world, we're the biggest consumers in the world, and as much as we like the cheap prices that the COMEX affords us, we don't like the fact that the Western world is setting the price, so we would like to have a part in that. That said, when you think about it logically, who cares if a bunch of Chinese people get together? I fail to understand why a bunch of Chinese people getting together at, say, 2 in the morning as opposed to the British people doing it at 10 makes any difference on the price. But what they're saying, they're making a statement that we want the pricing mechanism to move over here. And by the way, right after that happened, that coincided with a big jump in the gold price. So again, it's just one, as I say, it's one piece of the mosaic.
Well, the fact that they were moving towards physical possession and not paper.
Well, the Chinese are clearly the biggest holder of gold in the world. Mathematically, it must be the case, and they are now admitting to buying it. Of course, when they announced in July that they had 1,700 tons compared to 1,000 tons from 2009, they were lying about that too. And the reason they were doing so was because they wanted to get in the SDR basket, which was another PR move. They wanted to be accepted and say, look, we have gold, we're real. So they got accepted into the basket, and then of course they devalued the currency. I mean, it's all a sham. All this stuff is on the surface. When it comes down to it, again, the Chinese people, they're not some brilliant people sitting in some room. They just have a long, long history of gold and silver. They were the first people to create and destroy fiat currencies. They've probably created and destroyed more fiat currencies in their various dynasties and all the others combined. They know very well, it's ingrained in their culture that gold is money and silver is money, and they are acquiring as much as they can, and they are trying to take a bigger role in the world in the gold and silver markets. That's all it is. Just making a fix doesn't mean that's the end of the cartel.
I'd like to add to that one bit, and here's the thing. What's different, I noticed that the drops aren't as severe, because if all of a sudden the COMEX gets the idea of dropping the price again really high, really low, what I think would happen is that the difference between the COMEX market and the Shanghai market is that the COMEX is a futures market. The Shanghai market is cash. You pay and you get. So if all of a sudden the West starts to get keen about manipulating the price super low, what's going to happen? Shanghai people will sell their gold at a high price and do the arbitrage thing, and they'll start buying on the COMEX at a lower price to take delivery. Basically what it is, it's a governor. They cannot really start to screw with the price the way that they used to do on the COMEX market without, I believe, getting some repercussions from big investors in Shanghai, because when you're cash and carry, it's a real reflection. Here's what you pay, here's what you get. The futures market and COMEX, well, I'll short the hell out of the price and we'll call it this price, even though the fundamentals say that's screwed, right? So the people in the Shanghai will say, if these idiots keep dropping the price, let's just go buy it on the COMEX and take delivery, because we know that the real price is not that. So let's beat them at their own game. I believe what the Shanghai fix has done is put some sort of a governor on the manipulation on the Western markets, because if you all of a sudden drop the price too low, you're going to have arbitrage all over the place. So I think it's a good thing. It may not be totally visible, but to me, what I notice is less volatility. It seems to be a little tighter. And even the drop that we saw, it's only a 1 or a 2% drop. It's not like they've done it in the past. I think in the end, the Shanghai market will be the downfall of the COMEX market because it's the real price versus a make-believe price.
It's a lot of pieces of the puzzle, as I said, of the mosaic, the Deutsche Bank thing, you name it. There's all these things that are conspiring against the traditional ways of manipulating the market. But there's really only 2 words to describe all of this stuff that's going on, everything Andy's saying, everything I'm saying, and those 2 words are bull market. We are now in a bull market. What we were in was not a bear market. It was just a very successful 4-year manipulation when they almost lost control in 2011 and were forced, starting with the Sunday Night Paper Silver Massacre, and then, of course, the Operation PM Annihilation 1 on September 5th, 2011, the very day that the Swiss pegged their currency to the euro, etc. The point is that bear market phase is over. We are now in a bull market, which is why when Goldman Sachs in 2013 says, yeah, sell short gold, they win. And this year when they said it, they lose. Because no matter what these guys try to do, we are in a bull market now. And stuff like the Shanghai fix, which simply means the Chinese asserting themselves more and making the market more physical than paper, is just a big, big piece of the puzzle.
Our next question has to do with a new currency that's recently hit the market.
Hi, gentlemen. What is your opinion on Bitcoin and the other cryptocurrency that are coming around? And if you favor silver or gold more than Bitcoin, would you actually prefer Bitcoin over palladium then?
Okay, well, you are asking the right person now. And it's funny because I remember Daniel interviewing me. We were in San Diego. I guess it was the early 2014, just when Bitcoin had just come out and had this massive spike up to $1,000 a coin, and it pissed us gold people off because we were in the middle of our quote bear market and watching the price go, almost as much as an ounce of gold, and didn't understand a thing about it. That was 2014, so it was 2 years ago. But a lot has happened in the past 2 years. And, I've done my best to keep up with Bitcoin, not understanding a thing about the technology, but following to see what it is and what it means and what it might mean. And what I've come to the way that I've come to view it is that it seems like the hacking issues are not there anymore. I don't think anyone is worried anymore that they're going to wake up and, like Mt. Gox, all of their Bitcoins are going to be gone. And it's obviously become far more stable than it used to be because more and more people are starting to view it as money as opposed to an investment. I would have said, if you asked me 2 years ago, I would have said it's a pure speculative investment. If you ask me now, I say, guess what? I own some. I mean, it's not even a 1% position, but you're right, I definitely own some because I believe that it's taking on monetary values. In a world of cashless societies and negative interest rates and capital controls, I think people are looking for any way that they can preserve their values. So I believe that as a storage of value, not because it's going to be a currency, I think it has as much odds of being a currency as gold does as an actual official currency. But I do believe it's becoming a storage of value. I mean, I would not put a huge amount into it because it is speculative and it's new, but I do think it's taking on monetary properties.
He has a follow-up question as well.
Before I ask my follow-up question, could you tell me real quickly, would you prefer Bitcoin or palladium?
Palladium to me is just an industrial metal. Yes, theoretically it's a precious metal, but I have absolutely no interest in it. Platinum is another story.
Okay.
You can Google my article. I'll toot my own horn. I wrote it almost at the day of the bottom early in January, called Platinum, the Forgotten Metal, because I just, I looked at the math, aside from the fact that, look, it's okay that it's trading at a discount to gold, even though it's usually traded at a premium. I don't think it needs to trade at a premium. But it does have, over time, about a 90 to 95% positive correlation directionally with gold and silver. So I'm pretty sure that platinum is going to do just fine. As far as palladium, I have absolutely no opinion of it. I think it's just an industrial metal. If the dollar collapses, would I rather have palladium coins? Sure, but I really have no interest in it.
If you ask people, what palladium is, they look at you cross-eyed. Most people have no idea what palladium is. And And as Andy mentions, industrial-wise, its main uses are as a catalytic, a substitute for platinum in catalytics. And so there's only one country that makes a coin in palladium, and that's Canada, and they really have kind of stopped. You can get 1 ounce bars from Switzerland, sometimes from Russia. Palladium, to me, at very best, should be the tiniest portion of your precious metals portfolio, because when we think about history and preservation of capital, it lies squarely in gold and silver. Platinum has no monetary history to speak of in terms of protectionism. Palladium even less. So to me, it's okay to own a couple of palladium coins, but if I had my choice, 10 times out of 10, I would buy silver or gold over palladium, and I would buy platinum before I'd buy palladium. And, palladium is okay, but tertiary at best.
Andy, I would probably say, and just correct me if I'm wrong, the platinum and palladium could almost be completely separated from gold and silver, just as the mining stocks are separated from gold and silver.
100%. Gold and silver, to me, are wealth, are money, been money since the beginning of time. Palladium and platinum are industrial metals / investments, and but they're part of the same family. They don't have the history. I don't know how many times in the Bible gold and silver are mentioned. A lot. But you go back through time, platinum, you'll never hear about it. It's a new phenomenon. Palladium, even less than that. And if it weren't for the fact that palladium was used in catalytics, I have no other idea what it is used for. In the industrial world, I know it has other capabilities, but if it were more thought of, you would find other countries minting it other than Canada and the maple leaf, and they hardly make them because there's not a lot of demand. There was talk a couple years ago of the United States Mint making a palladium St. Gaudens, and they scrapped the idea. So I think, it's okay. Like Andy said, I'd rather have it than worthless dollars, but in the end, I think palladium is an afterthought until you have a really substantial gold and silver position built behind it.
Yeah, they're also more like a special situation investment right now because of the supply, because of the demand. But there's such a small amount of production that if a new mine was to come online, it could completely devastate the price. So, but again, completely separate from physical metal for protection. What was your next question?
Yeah. My next question is, excuse me, the current rules for taking out gold and silver from storage facilities, it's pretty easy. I have accounts, I could just tell them I want to take out my physical storage, and it should be pretty easy. But in the future, when we're predicting silver and gold to be really high, do you think there'll be extra rules put on by the government for these third-party storage facilities? Hey, now you got to pay an extra 25%, or you got to report it, or anything, or is it going to become harder to take it out?
You know what that sounds like to me?
Not talking about confiscation.
Okay. Sounds like a what-if question. You're saying, what if things get so crazy in the world that storage facilities start to take from you, or the government wants to take 80% of your taxes, of your precious metal. Again, these are the things that it's good you're thinking about now. But I assure you, none of these things would ever happen unless the worst case scenario already happened. So again, you have to make decisions. If you're going to own gold and silver, how much of it do you want to keep at a storage facility? If you're going to keep it at a storage facility, in what country? What type of facility? How much do you want to keep? I mean, you have to think of all these things. But again, none of these things get done proactively. It's all reactively. So I assure you, if there was ever a movement to tax away your precious metals, it would be because the currencies have already collapsed, and precious metals are becoming priceless. So you have to think beforehand and make decisions.
That's why I don't buy mining shares in South Africa, even though there are some companies that intrigue me because of the geopolitical risks at hand. I'd rather own mining shares in Canada and Nevada, where I don't have to worry about that. And here again, this is what I was saying about going through life saying, damn it, I knew I should have. I saw that coming. If you're asking yourself questions like that, then you're losing peace of mind and sleep at night. And in the end, that's the only asset that really matters, is peace of mind and sleep at night. So you keep it somewhere where it doesn't erode your peace of mind. And if you're starting to think, well, I have it in this facility and it's starting to weigh on you, then pull it out and hide it somewhere else. Because these are all these choices that we're left with, and I think the ultimate decision is one that gives you the greatest sleep at night.
It also goes to anything that is going to benefit you. If the question is the government going to try to screw me eventually? Absolutely. They're always going to try to screw you somehow. The next question is about the Brexit.
Yeah. Andy Hoffman, your thought on June 23rd, the vote for England, I guess, to exit? And impact on precious metals.
Well, let's see. I wrote an article this weekend after watching Brexit the movie, which you should all watch because it's free online, and I think it was called The Most Important Vote in History, something like that. So yes, I think the Brexit is a very big deal. And what that means is, while the UK still has maintained its own currency, some would say smartly, some would say not, because they've destroyed their currency just as much as the ECB has destroyed the euro. They have been smart. They have not been smart enough to avoid being inside the European Union, which is a big brother type organization, which has literally destroyed Europe. And if you watch Brexit the movie, I mean, people in Europe know this, smart people in Europe do, Americans don't. Just watching this 1-hour documentary, you'll understand just how destructive this is. Now, we've had a bunch of referendums in the last year or two. This is the trend, and there's going to be a lot more of them. I mean, I think there'll be a Texas secession referendum at some point in the future. But right now they're focused on Europe. We had the Greek vote. The people voted against the government. We had the Catalonian vote in Spain. They voted against the government. So that's the last two. The Swiss unfortunately voted with the government, as did Scotland. But I think that this one is going to be, the polls are showing it's a dead heat right now. And if the UK decides to leave the European Union, and they are the second largest economy in that European trade union, I think there will be tremendous ramifications on the currency markets. But more than the currency markets, you have all these nationalist trends around the world. And, I talk about the Texas secession. Everyone will be empowered if the UK leaves the European Union. That includes France, which is about to vote in an extreme nationalist. In Spain, where the moderate, he just got elected, now they're going to have a new election. In Portugal, they elected a moderate, and then they kicked him right out. And of course, Italy is a simmering pot of nationalism. So I think that right now, if they vote to leave the Union, I think there's going to be a lot of speculation about the breakup of Europe. So yes, I think that will be a big deal. And right now, from what I read, the polls show that it's somewhere around a dead heat. We'll see what happens. And there's going to be a lot of propaganda and market manipulation between now and June 23rd, I assure you.
Next question is about the mining shares.
Yeah, Andy, and also Daniel, I guess we all know that since December, January, the mining stocks have been killing the precious metals as far as growth. What's a good recommendation from your guys, from your own point of view, of weighting of mining stocks versus precious metals in the portfolio? And do you see any serious risks in the future for the mining stocks?
Andy?
Yes. No, I mean,
there you go.
Again, there's so much hype about my views on mining stocks. Look, I owned them for many years, and I worked in the mining industry for 5 years. And in 2011, I decided on a personal basis I did not want to own them anymore. And I was very vocal about it. I didn't say short them or sell them or they're going down. I said they are extremely risky and I don't want to own them anymore. Okay? The fact that they went down a lot has nothing to do with anything that I thought or believed. Frankly, I didn't think gold and silver, they'd be able to knock them down. So therefore, I probably didn't think the mining shares would go down that much. All I said was that they were risky, which it turns out they have proven to be amply so. But here we are today. Yes, They got killed and now they've had a big run. So what happens next? I don't know. If gold and silver prices keep going up in an orderly fashion, they will be great. Not everyone. Some of them will have problems. Many of them will do well. But if they don't go up in order, what if we wake up and there's a dirty bomb or something, or some horrible event goes on, or a bank holiday, and governments start to nationalize mines and stuff? I mean, there's all kinds of risks out there. I don't know what will happen. They may be the greatest investment ever, and they may not be, but they have to be separated. As Daniel himself, who's in the business, said right off the bat, they are separated. Gold and silver are money, mining shares are speculations. I have no opinion other than that they are likely to do very, very well in an orderly gold and silver market. But if you have a disorderly political, economic situation, it makes them more risky. It doesn't mean they will go up or down. It just means that they are risky. After all, they are targeted. That industry, I learned it more than anyone. That industry has been targeted more than any other. So again, high risk, very high potential reward.
So zero weighting?
No,
you're waiting, or either of you guys?
Zero for me.
Not for me, though.
Yeah, everyone's
I look
different.
at that as a whole different ball of wax than Andy does, and, there's no right to wrong answer. But I think a safe play is to use the model that the Swiss have used for 300 years in the way that they invest. Their investment strategy is of a pyramid. The older we get, the wider the base of our pyramid gets. So the theory is let's call it a 60-30-10 or a 70-20-10. Whereby the base of our pyramid is 60 to 70% of our assets in things like a paid-off home, cash in the bank, gold and silver coins, real estate that you own, things that are very conservative, low growth, and low risk. The middle portion of your pyramid, the 20% or the 30%, would be things like utility stocks, paying a dividend, treasury bonds, throwing off some income, things that carry slightly more risk but throw off some income. The top 10% of your pyramid is the home run, the mining shares, the .com shares, the swing for the fence type of thing. The theory behind it is that if you lose everything on the top 10, you make nothing on the middle 20 or 30. As long as you're making 2 or 3% on the base of your pyramid, you don't go backwards. And in a perfect world, you hit a home run on the top, you do well on the middle, and the base of your pyramid is meaningless. You can make more money on the top 10% than you can on the whole bottom 90%. The most money I ever made in my life was on one stock. I was 23 years old. I was 3 years in this business. I had a call from a client of mine who was a geologist, and he says, "Andy, how much money you got?" I said, "Not much." I said, "I have $9,000. I put $3,000 into an IRA the last 3 years in a row." He said, and God rest his soul, his name was John Tomczyk, and I'll never forget him. He's deceased. And I love him because he said to me, "Trust me, put everything you have into this one stock. It's called Western Copper." I said, "I'm 23 years old. I don't know squat. I'll take your word for it." So I put $9,000 into Western Copper. Western Copper, I was buying at under 20 cents a share. So I got an awful lot of shares, right? Western Copper, a few months later, got bought by a company called Western Silver. They changed their name to Western Silver. They got bought by a company called Glamis Gold for $7 a share. Glamis Gold, a few years later, got bought by Gold Corp for around $30 a share. And I turned $9,000 into $700,000 because of one stock that I bought in mining shares. So when you say these things don't happen, I say they do happen. And I simply say to you that as long as you're smart in the allocation, and lucky, you can get lucky too, but don't risk the base of your pyramid to the mining shares. In the last 3 or 4 months, Daniel has been promoting and writing about many mining shares, few of which I've been fortunate enough to buy, one of or two of which upon Daniel's writing. The first one, I was lucky enough to buy AG, and that stock, AG, First Majestic Silver, I bought it $3.30. Today it's at almost 12. It was over 12 the other day. That was in January, right? So here we are 3 months later. I put $40,000 into that, and I've paid for my 3 kids' college education if I sell today. So you tell me, is there room for mining shares in a market that's got its ass kicked so badly, so much worse than precious metals? The mining share industry has been beaten down so unfairly and unjustly, it's not even funny. And when you see mining shares selling at fractions of what they were when gold was 400, you tell me, is it a good place to put your money? I would say absolutely. I don't make any money doing it. I told you, call my friends at Global Sprott. They'll take great care of you. But I think you're missing a buying opportunity of a generation if you don't. Now, here's the nice thing about having a couple guys who really believe in what they say, but have a different opinion. I love him like a brother. He's a lot smarter than I am. And he may turn out to be right. I may turn out to be right. Who knows? Everything in investing is taking a shot, a calculated risk. And when I see something that's trading well below what it was 15 years ago when gold was a fraction of what it is, and I see it now with the world I see in front of us, I say, hell yeah, take a shot. But don't steal from the base of your pyramid to do it.
And what it comes down to is the last question. It has to do with how much sleep you can get. That's all. I've not once said what I think mining shares will do other than it makes me comfortable. I had mining shares 100% of my portfolio from 2002 until 2008, and probably 75% from 2008 until 2011. I had the greatest gains and losses of my life during that period. I determined personally, especially after working the business, I did not want to do that. I sleep well at night. Andy sleeps well at night doing different things. So again, do you want to invest in the mining shares? Sure, why not? If it makes you happy. Do you want to put 100% in? If it makes you happy. It's all up to what you feel confident in doing.
I will say one thing, and just to kind of tweak this, right? So I put some money into it, and my broker, who's my friend at Sprott, of all the people I've met in this industry, the brokers at Sprott Global are my best friends in the industry. They're people that I would hang out with if I were not working with them. And my buddy Eric calls me and says, you need to take some profit off the table now. You need to sell. It's gone too fast. It's ahead of itself. So, you know, that's the thing. I never think that with my gold coins, ever, ever. Ever. I hope I never need to use them. I'll give them to my kids someday. But I think about this investment I've made continuously. Should I sell? Should I pay for my kids' college right now? Be done. It's going higher. I had dinner with Keith Neumeyer in San Diego a few weeks ago, the president of AG. He says it's going way higher. What do I do? Oh my God, drives me crazy, right? I don't have that with physical gold, and that's kind of what he's talking about. It's the peace of mind, the difference between the two. One is my investment, I hope to get rich. The other is my wealth that I hope to give to my children and to my grandchildren. There's a vast difference between the two, an ocean of difference between the two. Never confuse or blur the lines between the two. One is wealth, one will make you wealthy if it hits, and will drive you crazy along the way. So,
yeah, I would say if anybody's looking for a thrill, you could just buy silver. And silver's a 10-bagger from here, at least, in my opinion. Again, it goes to just price speculation, but with the mining shares, there's so much that goes on in them. If you don't know what you're doing, you really probably should just avoid them. But with the mining shares, it's really people plays. I've seen companies, Andy and I have seen companies that are great companies, and they've gone from $1 when they started producing gold to 10 cents. And it had nothing to do with them. The people were actually really good people, but the market took them down. And, you know, some of these smaller companies, if the head guy, if he had a heart attack, these companies would see a tremendous amount of sellers. And you never know when a hedge fund is looking for liquidity. So you have to be very select. You know, I would not buy the GDXJ. It's got a lot of crap in there.
with the good stuff. So it's really a stock picker's market, especially for these juniors, but you have to partner with the right people who run them, and then the right people who are the shareholders. And, you know, as far as allocation, look, I'll tell you my own personal feeling on it is you have to, and it goes to what Andy said, you have to be comfortable. And when I was very comfortable with my precious metal holding, I actually about this time last year stopped. I used to buy silver about 10% of my income. I stopped and I started buying First Majestic silver, and I started saving in First Majestic shares, and I've seen the same thing and experienced the same thing Andy has, where it's just gone dramatically higher. But my house is paid off. I have a successful business. I'm very comfortable, you know, with my living standards, and you know, it's a matter of comfort. I was comfortable to make that decision, and just so it's even-handed, probably a year and a half ago, when these mining stocks were down 75%, I told my wife, how much worse could it get? They're down 75%. Let's have that all-in moment. Let's put $1 million in and watch this thing turn into $100 million. And I did that, and that $1 million went from $1 million, shockingly, and I picked really good companies, went from $1 million to probably $200,000 in the matter of 3 months. Not good. I went, and believe me, my wife for months didn't even ask. It was a don't ask, don't tell policy at the house. Luckily, you know, I've had an opportunity to reinvest and reposition things, and it's been an amazing year for anybody who's bought these stocks, essentially since the summer of 2015. And I agree with Andy. I believe we are absolutely at the birth of the new bull market. And for when it comes to the precious metals, you know, it's a saving strategy. It's safety. It's protection. When it comes to speculation and investment, that is, you know, it's really up to your comfort level on the mining stocks. Just know that they're extremely volatile. So if you've enjoyed these 100 and 200% returns, just know that a 25% correction could be coming. And just like these stocks have moved up dramatically really quickly, they can go straight down just as fast. Although I do believe we're in a bull market. If you saw what happened, what was it, 2 days ago on Wednesday, I mean, all these stocks had a massive pullback, 5-10%, just bam, last 2 hours of the trading day. The very next day, they all rallied right back to where they were. So I think the way gold is acting, just like these guys were talking about, and the way the mining shares are acting, it's not the way it's been for the last 4 or 5 years.
And let me just say, we're getting near the end. We're going to take 2 more questions, but then Andy and I and Daniel will be here for some time after. But of course, don't let your questions end here. Our job is to answer questions, all 3 of us, and we'd love to hear from you both on the phone and by email. And we really appreciate you coming. I also, before we get to those final 2 questions, I really, really want to thank Daniel Ameduri.
Yeah, thank you, Daniel.
Future Money Trends is one of the better, if not best, websites out there for education. And you can hear how Daniel talks. He's not promotional. He's trying to make money for himself and for you in an honest way. And he also puts out some of the best material in the industry. So again, Future Money Trends, thank you very much, Daniel. And
thank you.
Yeah.
And by the way, I only buy the picks that we profile. I don't buy anything else. The only stocks I own are the ones my subscribers own, and I own them after we profile
I've
them.
watched it. Daniel and I don't talk like Andy and Daniel do. I see him, I say hi, give him a hug. I'm always happy to see him at the shows, but that's our relationship. They speak and do interviews all the time. I've watched his picks. Every single one of them, but the potash pick, has gone to the moon. And he's a guy who's done what we've done successfully, and that is partner with smart people. And the smart people will get you to where you need to be. And if you would have done nothing other than follow his advice since the beginning of the year, you're up a couple 100% across the board on every single pick he's made. Kudos to you.
Thank you, sir.
Yeah, I just have a sort of a question about, I believe everything you said tonight about a big foundation of gold. I've been doing that since 2000. But I'm worried about the political events and the safety of me driving or mailing metals to wherever to turn it to whatever the de jure currency of the time is. So I'm thinking about, I need to have a way to do transactions, pay bills online, electronically. And there's gold money, but I'm not sure about that with that thing you had about stuff outside the country and with the government coming down on me.
You're just asking a what-if question. And
Yeah.
you're saying, again, you're saying you're worried about political events. Well, you should be happy that you've been buying gold since the year 2000. I'm damn worried about those political events, too. And honestly, the last thing I'm worried about is how I'm going to purchase things. I'd be more worried if you're going to be able to purchase things, if you have the kind of things happen that you are worried about.
We can help you. We can help you. I mean, you know, you could store the metal at the Dakota Depository. The nice thing about the Dakota Depository, it's not my company, although I've worked with them for 27 years. They're family to me. They have their own company. And so there's this line here that I can't step over. So if I call them up, let's just say your name's Joe Smith, and I say, hey guys, Joe Smith just called me. I'm in a hurry. He wants me to ask how much gold is in his account. Well, they'd say, sorry, Andy, even though you do $300 million of business out of here, and even though we've known you for 27 years, sorry, we need to hear from Mr. Smith. So my point to you is this. You could store your gold at the Dakota Depository, and you could call me up on a Monday and say, I need you to sell, after you alert the Dakota Depository, of course, and say, please sell 4 ounces of gold. You could say, I need a wire for $5,000 in the next 30 minutes. Done. Done. There's no shipping. It's in my logistics center. It's segregated to your account, fully segregated, fully insured, no shipping, and whenever you say sell, it's sold. You say send it to me, it's sent to you that day. No time lag. If you own a stock account, and you sell a stock, the securities law is T+3. T stands for trade day. So if you sell a stock on Monday, which is T, Tuesday, Wednesday, Thursday, on Friday morning, that money is in your account. With me, you call me up and say, I need it in 30 minutes. It's an emergency. It's in your account in 30 minutes. I'll wire it that moment. I have no delay. Or we'll send you an overnight check if you'd rather. So, as an option, you store it with us, not with me, but with the Dakota Depository, who I work hand in hand with, and you'll have money whenever you need it, no shipping involved. There's always a solution.
Right there, though, that is the difference between Miles Franklin and everybody else. If you've ever bought or purchased gold and silver from a bullion dealer, there is zero personal service. Zero. Right now, you have access to the owner of Miles Franklin. And what he's just told this gentleman, what he can help him do, or when it comes to the price of the metal, a lot of people like to try to penny pinch it. But look, just like he said, the guys who are cheaper, they're out of business. People lost the money. Miles Franklin is the safe way to go. It's the way Rick Rule goes in Sprott Asset Management, and that's quite a testament again because here they have their own bullion company, Sprott Metals. So milesfranklin.com, you can go there. There's going to be a new website pretty soon, by the way, too, where you can buy the metals online. But right now you call it in, you get personalized service, and that representative is even assigned to you then, right?
It is, and on my business card, so when I go and do like the Sprott show, and I have my cards out on the booth that 1,000 people walk by, and I had Rick Rule come up to me and said, are you kidding me? You put your cell phone on your business card? Are you kidding me? Do you ever get any sleep? I am the only president of a company that does the amount of business we do that I know of in this industry that puts his cell phone number on his business card and gives it to the public. I am accessible. What makes us different, when I can stand up here and say we're different, I'm a fraud if I'm not different. And what makes me different is my accessibility. Any of my clients will tell you they call me 7 days a week on my cell phone. Sunday nights doesn't matter. If I'm not there, I call them back. If they text me, I get right back to them. And I joke with my wife. I've taken a lot of trips around the world. I have yet to take a vacation in the last decade. Whether I'm on the beach of Jamaica, the Bahnhofstrasse in Zurich, or the rainforest in Panama, she takes pictures of me on my phone. She has a giant collage in her office of me on my phone all around the world. But if I'm not there for you, or you, or you, or you, or you, when you need me, what good am I? How different am I? I'm not. I'm a fraud. What makes me different, what makes our company different is someone like Andy who bleeds. If you read Andy, you know he bleeds this stuff. He is more emotional than anyone I know when it comes to this stuff and feels it. Me, I don't need to take your phone call, but I do. I take all of your phone calls, all of them, to the point where I'm joked and laughed at by my contemporaries in my industry, and Rick Rule says I'm crazy. But that's what makes us different. That's how we built our business from scratch, from a loan from a friend and cashed out insurance policies. That's how we've done $6 billion in sales and never pissed anyone off enough to file a negative remark. That's how I've got to where I am, is by being accessible and trying to be different, trying to be honest, trying to have integrity. To me, the one thing in the world that frightens me more than anything is a negative remark from one of you. And that ends what I'm able to do and stand up in front of a crowd of people at the Sprott Show in July and say, I've done $6 billion in sales and never had a complaint. That means the world to me. And that's the difference between us and anyone else. It's the only thing I can say that makes us different.
All right, last question of the night. But again, like Andy Hoffman said, we'll be around all night, well, as long as you guys want to chat. Hopefully that bar at the Hilton or Marriott, wherever we are, is still open.
Yes.
All right, I'll try to make it quick. So, Andy, for you, Hoffman, I think this conversation has been centered around a topic of an inflationary environment. Harry Dent strongly believes, yeah, you're smiling already.
This is the last question?
This is the last question. So, Harry Dent strongly believes that demographics play a very strong role, an important role in a deflationary environment. How do you respond to that, and what facts do you point to support your argument that that's not going to be the case?
I have not said that's not going to be the case.
All right.
In fact, I have been asked to respond to everything that Harry Dent has said by countless people because, look, first of all, if you look at his track record of the recommendations, you probably won't get as excited about what he says. But that said, what I have said about him is he is a brilliant economist. He is absolutely right about demographics. I've been saying the same things. I wrote Demographic Hell about Japan 4 or 5 years ago. I wrote Demographics and the Death of the Dollar a few years ago. Completely agree with him. The problem is with him, among other things, and many others, this insistence on the black and white deflation versus inflation. Most people don't even know what those two words mean. I mean, theoretically, inflation means the rate of increase in the money supply. There will never be a deflation of fiat currency system. There never has been, there never will be. And as far as when people say, well, it's going to go down because of deflation, there's no such thing as a deflationary crash. There's always something going up. I love how people say in like 2008, it was deflation, everything fell apart. Treasury bonds soared. Well, they'll say, well, but the yields deflated. Yeah, but if you invested in treasury bonds during 2008, you made out like a bandit. And guess what else you made out like a bandit in? Physical gold. Even if they knocked the paper price down, physical gold was up in 2008. Physical silver never went down in price. Okay? And again, there's always going to be things going up and down. Do you think that the price of health insurance, just to pick something, is going to go down? Because of the demographics that he's so deflationary about, with all the baby boomers getting old at the same time. And there's no money in the country, so the only way to pay for it is with money printing. Do you really think that health insurance, which is like one of the biggest costs in your life, are going to go down? Of course not. What about the cost of insurance in general? As I said, they're going to be taking rates negative. How are insurers going to do anything but raise their prices? Right? There's plenty of things that are going to go up in price. And the one thing, by the way, that has gone up consistently throughout history during deflationary periods has been gold. How about that? What do you think was the best performing asset in 2008? Gold. What was the best performing asset in the 1930s? Gold. Remember, it was revalued. They doubled the price while everything else was falling apart.
Do you know why that is? The reason gold does well in a depression or deflation is, as Doug Casey says so eloquently, it is one of the only assets in the world that is not simultaneously someone else's liability. In a depression or deflation, your biggest concern is the counterparty's ability to make good on their obligation. Well, this company issued me bonds, but they're going out of business. The U.S. government has bonds they're issuing you are dollars, but the currency's deflating and the bonds are going down. When it's a depression, you're worried about the ability of the person to be able to make good. Gold is not someone else's liability. So there's a man named Roy Jastrom who wrote a report, I believe, called The Golden Sextant, I think. He was a professor, I want to say, at Georgia University. It was a long time ago I read this, but basically his conclusion was that gold performs best in a deflation, more so than in inflation. Inflation, it makes you money, but in a deflation, when everything else is deflating and losing value, gold is not someone else's liability simultaneously at the same time, so therefore it retains its value. It has no counterparty liability.
You know what I was just writing about yesterday to finish this? I was writing about what happened during the last 3 market corrections, let's call them. When the Fed raised rates in December, before that well, the last 2. When the Fed raised rates in December, which caused the crash in January and February, and then last year when the Chinese devalued the yuan, which I predict 24 hours in advance. Well, in August, right after that happened, the Dow fell in a week. I think it was 2,000 points. The CRB index fell 8%. Crude oil fell from $44 to $37 per barrel. Treasury yields fell by 35 basis points. And gold went up $100 an ounce. And then what happened this year? The Fed raises rates. Remember, that's supposed to be bad for gold, raising rates from 0 to 0.25%. Well, it was the worst start of the year in the history of the stock market. And guess what it also was? The best start of the year in the history of precious metals. So again, here's 2 things that you need to avoid. Anyone who uses the numbers 5,000 and 10,000 as regard to their prediction of where gold is going to go, and anyone who uses the word deflation as to a reason why markets are going to do something.
Andy, I wanted to also say to everybody, where is this deflation? We read about it all the time, but you know what? Talk to a millennial. Their college tuition cost is soaring.
Rent.
Healthcare soaring. Rent soaring. Home prices. Seriously, where is the deflation?
Deflation is in your Apple phone and your big screen TV. Your flat screen TV. The first TV I bought in 2004 was $5,000 for a 42-inch TV. Plasma. Now you can buy it at Costco for $200.
Yeah, look, I wrote an article.
That we need.
No, I wrote an article 4 years ago called Need versus Want, and then I wrote another one, Need versus Want Part 2. That's what the problem is with deflation. It causes governments to print money, i.e. inflation, which means, as Andy said, the price of your Apple iPhone goes down. Not that anyone needs a new Apple iPhone, but the cost of food and insurance and rent and health care and anything else you need to live will only go up in price. You do not have crashing currencies and hyperinflation and negative interest rates without prices going up of things you need to live on.
Well, thank you very much for joining us, everybody. Really appreciate you taking the night. You can read Andy's blog daily, right? MilesFranklin.com.
Yes.
You can subscribe as well for free to his email list, as well as FutureMoneyTrends.com.